Hey, good morning, everybody. Good morning, Andy. Morning, Rob. Good to see you guys. How's everyone doing today? Hey, Steve. And Erla, good to have you. Adriana, nice to see you. How was Friday, guys? Did you learn something? I hope you did. It's always fun when my brother takes the room. It's such a cool glimpse into where you're going to be once you learn the basics. Good morning, Gino. Good to see you. Ron, it's raining. Joe, nice to see you. Enjoyed it? Good. It's pretty cool. Good morning, Muser. He just shows you what's available, guys. Next level. It's kind of cool. I used to not care for it, but now it's pretty amazing. So this class is designed to teach you the basics. He thought of you with the overlay chart. Yeah. Can you guys hear me? Give me a Y if you can hear me, please. All right, cool. Just wanted to make sure. So Pete should know. Guys, if you ever can't hear me, make sure you tell me in the room. And then when you see a whole bunch of Ys, that means that everyone can hear me but you, and that's your cue to reboot. So let me make sure Pete knows. There we go. I appreciate that, Joel. Guys, we're going to do what we do. And the cool thing is this class, for those of you that were in my brother's class, this class sets you up to understand what the hell he's talking about. No sound. Again, Jay, reboot. There we go. Everything's about foundations, guys. Andy, sort of. Everything is about foundations for sure. One of the things I do every day is I check news. I like to know when the news releases are. I really don't care what the news releases are. I just don't want to be in a position when they're announced, because there are people with more money than me that may create a spike or a jump. I just don't want to step in front of that emotional freight train. So this morning there was a little bit of medium impact at 8:30. I went and fixed breakfast. And nothing else going on until tomorrow, but it's these red and orange boxes, guys. Anytime I see them, that's pretty much it for me. That is my signal to stay out of the market, to just be patient, find something else to do. And personally, I could do this right here and never know what the news release is. Just know that if it's red or if it's orange, I don't want to be in the market because I don't want to subject myself to that emotional response. Each and everything that I talk about every day, guys, comes from the education page. Small class this Monday. That's okay. For those of you that enjoyed what my brother did on Friday, if you go to the resources page, the new indicators has all of those workspaces that he taught on. Feel free to go grab them, take a look at them. But if you're not ready for that yet, and not everybody is, if you weren't comfortable with it, if there were concepts being discussed that didn't quite make sense just yet, guys, that's totally normal, totally cool. Laying a foundation, understanding the basics is really what gets you where you want to be. And all the basics are found in the trading guide right here. Everything that I talk about in the morning is designed to prepare you to read your indicators, to understand what they're telling you so that you can find your trades. So in this classroom, the first hour is dedicated to what we call a high probability trade, specifically a high probability trend trade, a trade that has you trading with the trend. And each indicator on every chart, it says every chart, you can say both charts, it's only two. It's going to agree with the rules for the trade. You're going to have your strongest triggers and no termination conditions, and there's going to be no trouble spots between your entry and your target. Hey, good morning, Hamid. And this high probability trend trade is a trade that when you learn the rules, it's a trade that typically wins 70 to 80% of the time. It's a trade that produces confidence, but most importantly, it's a trade that teaches you to read your indicators, guys. Your goal for the first week or so with me should be just to understand some very key concepts, to look at your charts and understand if the advantages of the trade are present. And that's what the high probability trend trade does for you. It teaches you to to be able to visually see this information and translate it into a trade. And the reason that I push chart reading so much in the first hour and for new users is that 90% of your day is reading indicators. It's not trading. Trading is a small percentage of what we do every day. Again, I was up at 6 a.m. this morning Central. I come to class at 8 a.m. Central. I took one trade that fit my rules. That's it, just one. Doesn't mean that there weren't more opportunities, but I just found one that I was looking for. And it was plenty. I'm already up over $200. So reading indicators is going to identify advantages, guys. You're going to understand where the market is likely to continue. This is going to become your entry for the high probability trend trade in the beginning. You're going to understand where the market is likely to go through your chart reading. That's going to help you pick out your targets. And then you're going to understand where the market is likely to stop. And these are just areas that may cause reversals, areas that can create untradeable bounces. There's a rule designed to help you identify them. We're going to talk about that extensively. But your chart reading is what tells you that it's time to take a trade. It's not looking for trades, guys, but rather looking for advantages. And there's 3 advantages specifically with the high probability trend trade that we're going to look for. It says large chart. Let me get that laser pointer on there. Large chart must have strong trigger lines. That's going to create, rule number 1, creates the advantage of momentum. So there's your first advantage. Rule number 2, termination conditions false, none of those likely to stop the areas, gives you the advantage of a clear path. These first 2 rules, in my humble opinion, are the most important 2 things that you can learn. Because once you have momentum and a clear path, it almost seems like there's an infinite number of ways to make money in the market. And you guys get pretty creative with your reads. But when you have a market that is pushing in the direction of the trend, where there's nothing in the way to stop it, it literally is difficult to stop it. So I encourage you guys to focus on these first 2 rules. Be able to recognize them quickly, to understand them thoroughly. And then your third rule is your entry for the high probability trend trade. This is that likely to continue point, where the trend is already established, where the momentum is identified. When there's nothing in the way, you're simply going to look for that way to capitalize it. Rule number 3 gives you that ability. These 3 rules are only a 2 chart scenario. This trade is designed to be as simple as a trade can be, to be chock full of advantages and to give you the highest chance of success. Your large chart leads the way. That should be on a coffee cup on your desk. Large chart leads the way. The large chart's going to define the direction of the market. It's going to define the momentum in the market through rule number 1. And it's going to identify the areas that may be problematic through rule number 2. And this large chart is a very broad stroke of a brush. It's a slow moving chart. The large chart's like a loaded down semi cruising on the highway, and it's difficult to stop that large chart. And it shows the overall opinion of the market, what the people in control want to have happen. Your small chart is an entry chart. It's a refinement chart. It takes that broad stroke of a brush. Direction, momentum, and areas are defined on the first bar on the large chart. This small chart is an x-ray of that one bar. It shows you about 20 to 30 bars typically. And you're going to be able to pinpoint exactly where the market is most likely to continue on this smaller, faster chart. This is going to allow you to reduce your risk. It's going to let you increase your profit potential. And that's where rule number 3 comes in. Rule number 3 only comes into play after rules 1 and 2 are met. And there's someone in this room that made a great point. He only looks at his large charts, doesn't even pay attention to the small chart, doesn't even have them visible until his first 2 rules are met, because that large chart will lead the way. And we're using these 2. I pulled this out of the slideshow, but I think it belongs in there. These charts let you know who you're trading with, and they let you know who you're trading against if you feel like breaking rules that morning. The large chart is the large crowd, guys. These are the people with enough money to make anything happen that they want to have happen. These guys and gals can create trends. They produce that momentum. They react at those key areas. And when you're trading with the large crowd, it tends to be the path of the least resistance. Your small chart is more a reflection of the small crowd. These are people that still have more money than you, still have more influence than you. They go to better parties. They drive nicer cars. And they can create little fights against the large crowd. They have enough in them to create these retracements. Well, they fail about 70 to 80% of the time. Um, you're going to be able to pinpoint exactly where their failure is most likely to happen. This will become your entry for the high probability trend trade. So when you're looking at your charts, remember that that large chart's telling you what the majority wants to have happen, and it's easiest to go with that majority. And then your small crowd gives you just enough fight to reduce risk and maximize profit potential. Then there's a pretty easy way to get to where you want to be. There's a million difficult ways to get to where you want to be, but I'm going to give you the easiest, the one that's been proven, it's been tested, it's been validated, it's been verified. And guys, this is the quickest way to become comfortable and become a chart reader, and which leads you to be a confident trader. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to cover those 3 rules. We're going to do it extensively. We're going to break them down individually, and I'm going to give you everything you need to understand them. You found the difficult ones, Joe? Yeah, me too. That's why I'm so good at teaching the easy ones. I've made every mistake you guys will ever make. We're going to focus on these rules individually so that you can create a trade with those advantages. Your job is to simulate and to practice. To practice following the rules, guys, not breaking the rules. Creating that muscle memory for long-term success. Posting your trades in the classroom, guys. This is the first step in getting to where you want to be. Show me what you're doing. Every time you take a trade, or even more so, every time you look at a chart and you're like, I have no idea what's going on here, take a picture of it. But I want you to develop the habit from day one. The best feedback you're going to get is when you discuss the 3 rules and you use the language of the 3 rules. So you're actually saying strong triggers and pointing it out, and you're saying whether or not you have a clear path and pointing it out, and then showing me where you entered and where you exited. A lot of guys and gals like to show me just their entries. Guys, show me your trades to completion, because there's a lot of information that happens between the start and the finish of a trade. And my goal is every time you post in the room, you're getting a private session with me. It is the equivalent of saying, hey, Mark, this is exactly what I read and this is what I did. Is there any way for me to do it better? Is my read accurate? Am I taking these indicators and understanding them correctly? And then we really will. We'll just work together to make sure that you're comfortable, that you're seeing things the way they need to be seen. So don't be shy about posting. You can't overpost. You can't ask too many questions. There are no wrong questions, guys. The more you participate in this classroom, the better this classroom becomes. Because you force me to think about things differently, to make sure that everybody is getting the message that they need to hear. And if I'm not saying it so that it clicks to you, let me know. I'll find a new way to say it. We're going to simplify. We're going to talk about that high probability trend trade. And then, hey, good morning, Wayne. And then, once again, I'm going to let you know that this high probability trend trade, guys, it leads you into the other trades that are available. The very simple lessons, the advantages that you can recognize through this first trade are what sets you up to take more trades. But you've got to learn the looks. You've got to know what it looks like to have the rules met. You've got to know what that pattern is so that you can catch it quickly. And it almost slows down the market. And once you learn them, they actually do become easy. And that's where the spreadsheet that Nexgen gives you comes in. I give the spreadsheet every day. You've got it in your study picks folder that was downloaded when you got the software. But the spreadsheet, guys, is nothing more than a trade journal. Your first tab is where you're going to put your trades. Every trade that you take, win, lose, or draw, because you're going to start talking about those advantages and you're going to start looking at whether or not they're present and how you did. And there's a whole section dedicated for getting feedback, what you're told in class. And you might think you took the perfect trade, right? And then you present it and Mark says, oh man, but you traded into one of those termination conditions and maybe you didn't notice it in the heat of the moment. Because when you're in a trade, when you're looking for a trade, guys, there's a little anxiety and a little adrenaline that hits in the beginning. So going back and looking at the picture, studying what you did, dang old Mark, Studying what you did yesterday so that you can be better today is one of the easiest ways, guys. Taking pictures when nothing is moving. Looking at those pictures, analyzing the advantages, committing them to memory so that when you are in a live market, you find them quickly. That's what the second page is for, guys. Learning the basic looks of each rule so you can spot them quickly, create a high probability trend trade. Strong triggers and clear path. These two right here, yeah. If it sounds like the preacher's talking to you, he is. This is your sermon. This second tab, and I'm going to give you a tool to help you get the most out of it. It just breaks down those three concepts in the green section so that you know exactly what it looks like to have those advantages. And the red sections are the opposite of the rules being true. This is what it looks like when they're not. And it's important that you know both sides of the coin, because not only are you training your brain to look for these advantages, to look for these rules to be met, but you're also training your brain to tell you to do absolutely nothing when they're not. There's a favorite look section where you're going to develop your own trading plan. And then the client trade section is where I've really just kind of stolen stuff from you guys in the class. I'm not proud of it. I am what I am. But when you guys post in the room and you are just killing it and taking those advantages and taking those great entries and doing all these wonderful things, they become a great study tool. So there's almost 400 pictures of Nexgen clients from the room. But these are the clients trades, guys. So they may not all be perfect high probability trend trades, but what you'll begin to notice if you're looking at them is what it looks like to have momentum in the market and what it looks like to have one of those great entries. And you'll begin committing those to memory. For the high probability trend trade, there's the entry sequence for long and short, breaking it down into the steps to get you to where you want to be with it. There's management, there's patterns that repeat themselves. This spreadsheet is an absolute wealth of knowledge. And the more pictures you take, I love the 101s, Joe. I think it's probably one of my best ideas in the last couple years. The more pictures that you take, the more pictures that you annotate, the more time you spend in a market that isn't moving, the easier it is to watch that live market and to catch these advantages in the moment. And again, when you're taking pictures, you're talking about those three rules, what you see, using the language to make sure that you're following them. And then we're going to get to work. Are there any questions before I get into the rules? We're going to start talking about these three rules. I'm going to break them down. I'm going to show them to you. I'm going to try and convince you that the only reason you should be in a trade is if the rules are met. And if the rules aren't met, it's okay to sit on your hands and do nothing. One of the things that I refuse to do in this room is give trading advice, guys. I will never tell you what to do with your money or how to take your trades. But what I will do is show you the best of the way, the best of the best, the path of least resistance to get you to where you want to be. So rule number one, what a great place to start. Large chart needs strong trigger lines, guys. Your big chart, your slow chart, that one that defines all the good stuff, must have strong trigger lines so that you can have that advantage of momentum. And on the large chart, if the background is green, the market is going up. If the background is red, the market is going down. I know that you guys with a little bit of experience say, but no, you have to have higher highs and higher lows for it to be an uptrend. We keep it very basic. This green background lets you know which direction you should be looking for the high probability trend trade. And it does that because the only way that I can have strong triggers in an uptrend is if my small triggers, these solid lines, have broken above my large triggers. That's what paints the background green. And then you'll see that there is space created between the small and the large. The triggers are wide, they're angled in the direction of the trend, and it's this gap between the small and the large triggers that let me know that the odds are favorable for the market to continue up. Odds favorable momentum is the battle cry in this room, guys. And in a downtrend, when the background is red, the small triggers and the large triggers will be red as well. And the space between the two lets you know that the odds are favorable for the market to continue down. And once again, odds favorable momentum, guys. There are people in this room that have trading plans that are 99% dependent on having a market that's likely to push in the direction of the trend. These strong trigger lines create an outstanding advantage, guys. They can push the market This is the look that typically breaks those key Fibonacci areas, and this is a look that can cover a lot of the mistakes that we all tend to make as new users. So it's not a difficult look. Space between the triggers means strength. When the space is gone, when the smalls work their way inside of the large triggers, it's weakness, and anything can happen up or down. And this is where I remind you guys that that silly English Lit degree forces me to say that language is important. That, where did my pointer option go? There we go. It's not letting me. That's okay. The space between the two. Guys, odds favorable. Use those words. Strong. Use those words, because when the space goes away, weakness is the phrase. Weakness is exactly what you're looking at. And weakness takes away the advantage that we're looking for. And if we go to a live chart, I haven't really looked at it much today. This is crude oil. There's that strength, that separation between the small and large. The background's green, the smalls are green, the large are green, and it pushes right through those key areas. And you see it push down with the small triggers. And then when we start to get weakness, especially at areas, that's where we begin to see reversals. When we start to get that weakness, those anything can happen triggers, that's when you see deeper retracements. That's when you see markets reverse. So in the beginning, brand new users, let's embrace that odds favorable momentum. This is the one that leads the way. Is everybody good with that? That's typically the easiest lesson that I ever teach in this classroom. Space between the small and large, the colors agree, the strength is there. Once the space is gone, so is the advantage, guys. And strong triggers lead the way, because strong triggers push the market. They can break key areas. They can cover our mistakes. Once we have it, once that momentum is in play, it's time to make sure that we're not trading into an area that may stop the market. And we call those termination conditions. Termination condition false, which means that you'll have room to profit targets, which means that we have that advantage of a clear path. And I want you guys to really start talking to yourself out loud. Talk to your screen. I have momentum. I have a clear path. I don't have a clear path. Make sure that your brain hears what's going on that screen. We use lines on a large chart. Areas on a large chart are the areas, these are the lines that may stop the market. And there's kind of a rundown. You don't have to know what they are, but it's good to name them so that you know what they are. There's a divergence high line. It's a magenta line, and it prints from a pivot if there's a loss of momentum in the move. These divergence lines are created about the third bar down. It says that there's a loss of momentum, and these lines that print may stop the market. There's the divergence low line, the cyan line, this light blue, same thing. If there's a loss of momentum at a pivot, these lines print. It just means a loss of momentum. But when the market returns to these lines may be a place where it reverses. We have Fibonacci resistance. It's a red line, solid. And when the market is trending up, this is a point where the market may stop, may bounce, or reverse completely. Support is the opposite. When the market is trending down, this is a point where the market may stop, bounce, or reverse completely. The same is true with these yellow 1-to-1s. In an uptrend, it's going to behave as resistance. In a downtrend, it may behave as support, guys. And all of these lines on their own are just lines. We're going to use those T3 trigger lines, the same ones that create momentum, to determine whether or not they're likely to stop the market. So when we talked about that large crowd, when we looked at that picture, these guys right here, they've already given you the trend, and the trend is up. They've already established momentum, and the momentum is strong. So now we need to make sure that there's no lines where they may react. And these lines on the large chart are where the buyers buy and the sellers sell. And this is where fights happen and decisions are made. And the easiest trading for new users happens away from these areas rather than right at them. So in order to determine if resistance or support may stop the market, the first thing that you're going to do is you're going to let price reach that area. You're going to let the buyers push it up to resistance, or you're going to let the sellers push it down to support. And when you reach that area, when the price bars reach that area, the decision-making process kicks off. So you're going to ask yourself, where are my trigger lines? The trigger lines are going to tell you what the expectation is. If price reaches resistance, where are my triggers? And if they remain below, it's a termination condition and the price may reverse the market. There may be an untradeable bounce, guys. You never know what's going to happen in the market, but you do know without question through rule number 2 that if price reaches this line and the triggers remain below, your path is not clear. And more often than not, there's an untradeable bounce or a potential reversal. More often than not, which is why it became a rule. Reaches support, triggers remain above. It may reverse the market. It may create a bounce. There might be a fight that lasts for an hour, guys. Rule number 2 keeps you from trading into an area that may stop the market. And again, one of the easiest ways to learn this is to just scroll back. Directly to resistance, triggers remain below, even with momentum. Look at the bounce. Directly into support, triggers remained above. Sure enough, it goes up. There's no triggers through a divergence low, no triggers through a divergence high. Support, resistance, resistance, egads. Look at how often these lines stop the market. And notice that when they break, they're breaking with momentum. So guys, pretty simple recipe. Price reaches the area, triggers remain below resistance, above support. Is everybody okay? No trades into the area, your advantage is gone. That's what the rules say. All good? Cool. So when can we go? Price reaches the area, and I can't take a trade. When the small triggers and the large triggers get to the other side of support, when the small triggers and the large triggers get to the other side of resistance, the area is considered broken. The path is now clear. We're looking for the momentum, we're looking for the push, and we're looking for the entry. And this path remains clear until the next area is reached. So price reaches support, every line is going to be a termination condition, at least for a moment. When the small and large break through, the path is now clear. We're going to look for those rules to be met. Support typically behaves as resistance. Resistance behaves as support. And guys, these are the basics for the brand new user. For the high probability trend trade, you either have a termination condition or you have a clear path. And let those be your only options for a week or two, just so that you become comfortable with the looks. And what that's going to do, your knowledge from the high probability trend trade, is going to open you up to your second trade that I'm going to give you a plan for. But you have to understand that no triggers means that it's not a clear path. And you have to be comfortable with the idea that both the small and the large must break above resistance before that path is clear. And that opens you up for the potential to break, what we call a 50-50 trade. And a 50-50 trade means that the small triggers break through the area with odds favorable momentum, with those strong trigger lines, but your large triggers are lagging behind. They haven't quite cleared. This potential to break creates a lot of opportunity. And to be honest with you, the majority of your trend trades are going to be this 50-50 look. And I will hand you a plan that revolves around maintaining momentum and having a low risk entry. But this potential will never be a broken area. It'll never be a clear path. So it will never be a high probability trend trade. It'll be what we call a medium probability trend trade. I'm going to hand you a plan for it to optimize your chances of success, but you've got to know that it's only potential. And guys, here it had the potential and it still didn't break. And here you can even see the dance right at the fibs until it broke. So those are your options. And there's going to be times, guys, when your path is not clear because the areas are stacked a bit, because there's multiple areas of resistance, because there's multiple areas of support. And to be honest with you, this is about 90% of your day. And it's okay to do nothing. It's all right to sit on your hands. It's all right to stand up, walk away, go play with the dog, go get a popsicle, toast a waffle. Do something other than trade into these lines, because you may have to be patient for a while. But it's okay. Guys, the futures markets trade billions of dollars every day. You don't have to be in every move. Every tick isn't your tick. Every dollar isn't your dollar. Our job is to catch the best, the easiest, the highest probability to get into the market, to get out of the market, to get paid. That's our goal. and getting paid becomes more difficult when you trade into areas. So you're learning from day one that patience pays dividends, that doing nothing doesn't cost anything. Guys, there is no cost associated with not being in the market when the advantages are present. And very often, rule number 2, it gives you the ability to see where that large crowd, where that driving force is going to make their decisions. And rule 2 is this awesome rule to keep you out of chop, to keep you from trading into these areas, to keep you out of consolidation when the buyers and sellers are fighting. And it pays huge dividends, guys. 90% of your day is spent waiting for advantages. 10% of your day will be actually trading. 10% of your day, guys, if you spend 6 hours in front of your screen, you are likely to trade maybe 36 minutes. I spent 2 hours this morning. I was in the market for about 45 seconds, just to give you an idea. So I'm going to ask again, is everybody cool? Momentum leads the way. And then if price reaches an area and the triggers don't break, we don't have that clear path. Rules 1 and 2 have got to be met before we ever look for an entry area if the high probability trend trade is your trade. Can you guys give me a why? You don't have to. I know this stuff. I'm good at it. I think about this stuff in my sleep. So here's the deal. When the rules are met, guys, we're going to go look for an entry. We're going to find a way to capitalize on momentum in a clear path. And if I turn my attention to the smaller, faster chart to look for that entry, and I see 3 of those divergences, 3 cyan lines from a low, or 3 magenta lines from a high, this is the only time in a high probability trend trade when rule number 2 is not met because of the small chart. My large chart already has momentum. My large chart already has a clear path. And as I come looking for an entry, if I see 3 divergences at a low or a high, 3 losses of momentum, this tells me that my path isn't clear, that it may terminate the trend, that it might create a little untradeable bounce. This small chart is literally giving you information because it's faster that you can't see on the large chart yet. And this will help you see reversals that seem to be coming from the middle of nowhere. It becomes more powerful when you have weak triggers, smalls inside of the large, and more powerful still if that final pivot is higher than the previous from a low or lower than the previous from a high, creates a little head and shoulders. And a lot of times on the large chart, when you see a market that tends to turn from nowhere, and we'll see if this happened at 5:26. Sometimes it does and sometimes it doesn't, but I'm going to scroll back to 5:26 a.m. and we'll see if the small chart gave us any indication. There's 1 and then 2 and, well, finally 3. Kind of from the middle of nowhere. But the small chart will kind of point out when the large chart isn't going to make it. And it's a great advantage to have, and it's a recognition that you should have. And if you take the perfect entry and 3 divergences do print, well, this gives you the opportunity to preserve a little equity, to get out of that trade, to get out before the push happens. So large chart says momentum. Large chart says clear path. Small chart doesn't have 3 divergences, so we're going to define our entry. We're going to pinpoint where that small crowd is most likely to fail with such accuracy that you guys are going to be able to use a limit order. You can actually wait for the market to come to you, and you're going to use a limit order to buy or sell that little pullback that the small crowd creates, and you're going to have that limit order waiting at areas, but it's important that those areas are inside of triggers. And your highest advantage as a new user comes from areas inside of what we call favorable large triggers. And favorable large triggers mean that the large and the synthetic, and the synthetic are just the large triggers from the large chart, that the large and the synthetic are overlapping. They're wide. They're one on top of the other, like 2 snakes riding piggyback. And this look, what it does for us is it takes where we expect the price bars to return to. Price returns to the large triggers. Doesn't matter what chart you're on. Large chart, small chart. Price loves to come back to those large triggers. So when the large chart large triggers and the small chart large triggers are overlapping, you've only got one place where you expect that market to return. And then when you put fibs, midbands, or yellow 1-to-1s inside of those triggers, you give the market something to bounce off of. And that's kind of the basis for pinpointing where the market is most likely to continue. Small chart price may retrace back to the large triggers, and I've got 1-to-1s and a fib in there, and these may produce that bounce that I'm looking for. But price may also return to the large chart, large triggers, the synthetics, and I have a mid band that may produce a bounce in there. So what we're going to do is we're going to create a window that goes from the highest point of support to the lowest point of support inside of favorable large triggers, or in a short trade, from the lowest point of resistance to the highest point of resistance. But the key is having those areas inside of triggers, guys. And the further the triggers spread apart, the larger these windows become, the more risk you have on a trade and the decreased accuracy. So when pinpointing an entry for a long, first and foremost, without question, large chart says up. Large chart has momentum. Large chart has a clear path. And then we get this magic reversal bar, guys. And the reversal bar signals the beginning of the fight from the small crowd. The reversal bar is not your entry. The reversal bar is actually a loss of momentum. And we need that loss of momentum because that sets off the pullback, that fight by the small crowd. Once the reversal bar prints, your job is to locate your trigger lines, large and synthetic, one on top of the other, wide in the angle of the trend, in the direction of the trend, and then look for the areas inside, fibs, mid-bands, or yellow 1-to-1s. Large chart lines could create problems. On the small chart, they give us something to bounce off of to continue with the trend. So you're going to create a window. Your window may be 1 tick wide, your window may be 15 ticks wide. That all depends on the areas and the triggers. But for a long trade, your window goes from the highest point of support, in this case it's a mid-band, to the lowest point of support, happens to be those 1-to-1s. This blue shaded area is where I expect the small crowd to fail. This blue shaded area is where I expect the market to continue with the trend if this is going to be a winner. 70 to 80% of the time when the rules are met, that's exactly what happens, guys. But 20 to 30% of the time, small crowd pushes beyond those triggers. It pushes beyond those lines. So anything on the wrong side of the triggers, and when I say wrong side of the triggers, anything below the large and synthetic in a long trade or above the large and synthetic in a short trade, guys, we're not worried about these lines. These are not where we want to be in the market. We've already lost an edge. Your limit order will go just above the highest point of support because the large chart has momentum and nothing in the way. And then in a short trade, one of the great things, my mother-in-law sends me messages every time the S&P or the NASDAQ goes down a couple hundred points. Are you okay? Are you okay? Hell yeah, I'm okay, Mom. I went short. I waited for a reversal bar. It signaled the fight. I found my triggers, so I knew where the price bars were likely to return, and then I pinpointed the areas inside, fibs, mid-bands, and yellow 1-to-1s. My limit order goes just below the lowest point of resistance. This becomes your entry for the highest probability trend trade. This is your best chance of success. Any line on the wrong side of those triggers is not a part of the equation. Any line on the wrong side of these triggers is exactly where I don't want the market to go. So once you understand, do you get it? Anytime the markets go down, your friends and family are going to call you, and you're going to be grinning like the cat that ate the canary because you went short. It's kind of funny. Guys, if you give me a couple weeks of pinpointing where the market is most likely to continue, if you give me a couple weeks of learning how to go through the process of identifying momentum and that clear path, of learning to recognize and then eventually trust these areas inside of favorable large triggers, your ability to pinpoint where the market should continue also gives you the ability to recognize where the market should not go, beyond those trigger lines, beyond those areas inside of the trigger lines. And this is actually where your initial stop is going to go when you take these trades. You're going to put your stop where the market should not go, and that's generally 4 or 5 ticks above all the trigger lines. And we give it 4 or 5 ticks, guys, because the market moves. It's emotional. Give it a little wiggle room. And one of the things that you're going to have to become okay with is that you will lose trades. There will be times where your trade doesn't work. There'll be times where your trade doesn't work twice in a row. and you're going to start to question things. And that's why repetition builds trust. If the market gets beyond the triggers, beyond the areas, I don't want to be in it. I want to take that small loss and I want to wait for the advantages to come back. The cool thing is that with all those advantages, once you get a reversal bar in the direction of the trend, you can reduce even further. A couple ticks below it for a long, a couple ticks above it for a short. And it's not uncommon to see the clients, to see you guys taking beautiful long trades, getting a reversal bar, and maybe it just doesn't work out. And giving up maybe 2 to 3 ticks on a trade instead of $300 to $400 way down here, hoping it does something that the indicators no longer say it's going to do. So your job is to be able to pinpoint entries, guys. Great entries create manageable trades. Great entries foster success. Great entries reduce risk. And great entries, these pullbacks maximize profit potential. Because when you're waiting for the pullback, guys, the market's all the way up here. And it's only 8 ticks from trouble. And this is going to scare a lot of you new users. Oh, I only have 8 ticks. I'm not gonna risk my money on this one. But if you wait for the pullback to the area inside of favorable large triggers, suddenly you have 25 ticks. You've got 30 ticks. You've got $200 to $300 worth of potential profit because you pulled back. And because you wait for the pullback, your risk is as low as it can possibly be. And once that bar prints, it's even lower. So learn entries. Ask as many questions as you can come up with on entries. Make sure that you study the idea of momentum. Make sure you get the idea of a clear path, and keep it very basic in the beginning. Keep it very simple. And one of the things that you'll be able to do once you get to the point where it's time to study, it's time to build trust, is on your large chart when the rules are met, when you have momentum, when the path is clear, you're going to see tails after the fact. If you just scroll back on a large chart, you're going to see these tails. Circle these tails. And if those tails line up with areas, guys, you have a high probability trend trade. Commit this look to memory, because when the market isn't moving, it's easy to take a second and say, hey, that is in fact momentum. That is a clear path. This did come back to an area. Commit it to memory so that you can catch it when the market is live. And I don't know if we've had one, but just for grins, even with weak triggers, let's see if the pattern holds true. That was 902. No, it didn't. Didn't have our advantages. It didn't quite make it. And because of the huge run, I'm looking for one of those tails for us. Mondays are a little slow sometimes. That's probably a good example right here. Odds favorable momentum, clear path. And guys, we had to go all the way back to noon on Friday. But it pulls right back to the mid-band. It's just on the wrong side of the triggers, which means you may wait for a confirmation bar rather than hoping that the market goes down from beyond the triggers. And I know a lot of you guys caught this one that day as well. So, are there any questions about the high probability trend trade? Are there any questions about the individual rules? Because in order to get to where you want to be, guys, you've got to learn those very basic rules. You've got to be able to recognize them quickly. And that's what this is designed to do for you. This is Chart Reading 101. This does nothing more than help commit these looks to memory to make sure that you don't make mistakes. And this reinforces the lessons, and it does speed up the process of becoming a chart reader. And it all depends on taking pictures, not trades. So this is great to do after the market's closed, after you're done practicing. Go back and take 25 pictures of strong triggers. And then take the opposite picture, the one of weak triggers, so that you know the difference. Take pictures of a clear path, take pictures of a termination. And guys, go look for those entries. Circle those tails, find those entries, take those pictures, know what it looks like and where your entry goes. But don't just take the pictures. And this is the most important part, guys, is you're creating a connection between your brain and what you're seeing. And forcing yourself to type out on your chart This is a strong trigger because of the separation, because of the angle, because, everything says up. Guys, and once you do that, what happens is you begin to look at your charts and you speak to yourself in terms of advantages, because you know exactly what the advantage looks like. And the time that you spend typing, analyzing, and posting into your spreadsheet not only reinforces the looks, but what advantages are to be had or lost with each look. So you can say to yourself, and there's a 101 section here, this is my strong trigger look. This is when I'm looking for the next rule to be met. This is the weak trigger look. I'm going to learn how to sit on my hands. And if I have strong triggers and I match it with a clear path, well, then I'm going to look for an entry. But if it turns out I'm trading into one of those termination conditions, once again, I'm going to abandon the search. I'm going to say to myself, my money is worth the best of the best. So I'm going to give you this, but guys, you're going to piece these individual looks together to create the high probability trend trade. And as you go back and take these pictures, this is your cheat sheet. This is strength and this is weakness. This will help you take those pictures. This is a termination. This is a clear path. You've got a pretty clear map of what it means, and then how to find those windows and exactly where your limit order goes. All of this is for you on this sheet. And then there's a checklist. One of the other advantages that you can give yourself is you can go back and use what we call market replay. You can replay every day that you trade as though it were live. And market replay isn't this tool where, oh, I remember it went up and broke through all these fibs. Let me make a whole bunch of simulator money. Market replay allows you to hit the pause button to make sure that your rules are met before you get in. This checklist lets you do that, lets you police yourself to make sure those advantages are present. And this checklist also gives you the correct language to write on your chart, right? Odds favorable momentum, no terminations, areas inside of favorable large triggers. So print that one out, get it on your desktop. And then once you get these very basic concepts together, guys, I'm going to give you this plan right here, the KISS plan. This is for new users. The one thing that I always have to remind you is that the high probability trend trade is not your only trade, it's your first trade. It's the trade that has been proven to win more than it loses. It's the trade that creates confidence through that memory of success, and this is the trade that teaches you to read your indicators. And this KISS plan is designed to optimize your chances of success with that trade. And then through simulation, study, class feedback, and continuous practice, guys, you will be empowered to craft a plan that is tailored to your personal goals based on your experience reading the indicators. That's AI telling you that when you can read your charts, guys, you're going to find a lot of opportunities. Does it mean that you need more opportunities? Absolutely not. But you'll see them and you'll probably grow your plan. So your simple plan for consistency is don't fight the large chart. Don't fight the large crowd. If they say up, go up. If they say strength up, don't fight that strength. And if they reach an area that may stop the market, there's no reason to trade into it. Let them either break it or reverse. You don't have to be caught up in their emotional trading. Define your entry. Get in where the market is most likely to continue so that you have the least amount of risk, so that you have the highest chance of success. And then once you're in that market, here comes your pucker factor, new users. You've got to do something with that great entry. You've got to manage your trade. So in the beginning, as you're learning to read your indicators, I have found through experience, through teaching for the last 5 years, that if you allow your management to be every bit as mechanical as your entry, if you keep it a series of if-then, that is going to set you up for success. So if your entry is a short entry and you get in where the market is most likely to continue, well, then your stop goes 4 to 5 ticks above that area where the market should not go. And you're either going to get stopped out of that trade, which is okay. It's a normal part of a positive equity curve. Anything that wins 70 to 80% of the time is going to lose 20 to 30% of the time. If you don't get stopped out, then you probably got that reversal bar. That bar that says, hey, we're going with momentum, we're going with trend, we're trading in the direction of that clear path. And you'll reduce your risk. If I don't get stopped out and get a reversal bar, then I will reduce my risk 2 ticks above that reversal bar in the direction of my trade. And then there's nothing to do. Brand new users, there's nothing to do. You're either going to take a small loss because they're going to come back up and get you, and that is going to happen every now and then, or they're going to push you down to your first target. One of the things that I think is important for new users is to learn how to get paid, to learn how to take profits, to be okay taking profits, to kind of squash that little voice that's going to be deep inside of you that's telling you hold for more, stay in a bigger move. Because what happens is that hope gets you stopped out of trades where profits could have been taken. So as a brand new user, as you're learning to read your indicators, get paid. Your first target is $100 in the distance. And $100 feels good. It really does. It dries the sweat on your palms a little bit. The butterflies in your stomach begin to go away. And you have money in the bank. And there's that confidence through the memory of success. So if your first target is hit, then your new stop is break even. You're going to take all of the risk off of that trade. You have nothing to lose. Because I'm going to tell you, the further away it gets from your entry, the more you're going to want to move your stops and targets. Because you're going to have this fear that you're going to give it back. You're going to have this fear of losing. What if it comes back? What if it doesn't work? So take all of the risk off, guys. You've already got $100 in the bank. And your second target is only $200 away from your entry. And that break-even stop creates a little bravery. It allows you to hold on, to believe that the only reason that you're in this trade, the only reason you went short in the first place is because the large triggers looked like this, because the path was clear, because this is a market that was screaming to the downside with absolutely nothing in the way. And if it hits your second target, guys, that's a $300 trade. That's a $300 winner. You're learning how to get paid while you learn to trust these rules, to trust these indicators. And you're out. You're out of the market. It doesn't matter what happens next. It doesn't matter if it drops another 100 points. You're done and there's $300 in your pocket. And guys, that's okay. Because management is just like entries. You're going to create a plan tailored to your personal goals based on your experience reading the indicators. You're going to begin to recognize scenarios where maybe you need to get out a little sooner, or maybe you need to hold a little bit longer. But until you have the repetition to do that, keep it very mechanical, guys. Keep it very if-then, and focus on that best of the best. And then what you'll find is that once you're good at this trade, there's your second trade. And this is what that 50-50 look, that potential to break trade. And this second half of the KISS plan is designed to optimize your chances of success with the 50-50 as a new user. And it requires that you understand the idea of a strong top or bottom. And it's not mandatory for the high probability trend trade, but it does create an advantage. But it is mandatory to take that potential to break. Momentum, you have to be able to recognize it. Rule number one. So if you skip that lesson, you're going to struggle with this trade. Being able to recognize divergence. Divergence is the number one killer of this 50-50 trade. And if the majority of your trades are going to come from this side of the page, you have to be able to recognize it, to trust it, and to not trade into it. And then using your entry rules for the high probability trend trade, for the 50-50. And then it reminds you, divergence, no trade. And in management, it reminds you, divergence, get the hell out. Divergence kills 50-50. So you guys are getting everything that you need to be successful with the software this morning. I'm going to give you the chart reading 101. I'm going to give you the high probability trend trade checklist. I'm going to put the KISS plan in the room. I'm doing it right now. And I'm going to give you two other sheets that I think are very important for the new user. And the first one is nothing more than a daily goals sheet. And what this daily goals sheet does is it tells you that you don't have to make all the money to make amazing money. You don't have to be in every move. You don't have to hold for giant moves. And if the best you could do every day was $300, only $150 per contract, that's going to add $75,000 to your bottom line, 252 trading days in a year. And you'll find within the first month that $300 is a pretty low goal. And 5, 7, 9, 1,000's not unlikely at all, guys. So learn how to get paid initially. And start learning how to, even more so, if my goal is $500, learn how to stop trading when your goals are met. Because very often, people focus on their entries, they're learning their management, and they continue to trade long after goals are met, and I see a lot of people give it all back. So not only know that you don't have to make it all, but learn how to stop when you've made your goal. And then finally, the one thing that you're going to have to know, before you go live, before you go sim, I'm teaching my wife to trade again. And I told her, I said, there's two things that you have to know. One, you have to know your entry rules. And then two, you have to know your exit rules. Because these are what create your advantages. Your entry rules are based on patterns that have proven to win more than they lose. And your exit conditions are exactly why you're going to get paid and where. And the more consistent in action that you can become with your entries, with your management, the more consistent in profits you'll likely become. And it's the process that yields the results. Your wins and losses have nothing to do with your desires. You'll never control the market, and you'll never be able to predict where the market is likely to go. That's why we trade patterns that have been proven to win more than they lose. And the rules help us remove the emotion, because once you accept that you're not in control, once you accept that you don't know what the outcome is going to be, but you know without question that the pattern you're trading wins more than it loses, you kind of just submit to the rules and you let them work out, and you don't care if you get stopped out because you trust that another advantage is coming, guys. So for the brand new user, if you're in a high probability trend trade, you know exactly what it's going to take to get you in. Momentum, clear path, and an entry area. And you know exactly what it's going to take to get you out, those KISS plan rules. And this is your basis. This is your foundation. And then as you grow with the software, not only will your management change, but so will your trade selection. You'll find more opportunities. But each entry has a unique management plan. Each entry has a different set of advantages. It's a different pattern. So you've got to keep it basic first and then grow from that point. And guys, that is my first hour. And it is the same first hour every morning. It's the same first hour every day. My goal is that you guys can take these advantages and turn them into trades. Are there any questions about the high probability trend trade? Are there any questions about the ideas of momentum or a clear path? Can we take a look and see if maybe one of these tails gave an opportunity? Price returned right to the triggers, but our area was before the triggers. This one was pretty sweet, wasn't it? Right into it. In at 93, it went all the way to 88. 5 points. Guys, that was your $300 trade right there. You would have been up 300 by 6:38 in the morning. And then it goes into the area. Can we say untradeable bounce? Do you guys see multiple divergences in the same area telling you don't take that next short? And they weren't quite done, and they pushed down. And that was your entry at 83. Once again, the exact same price. Weird. And you made your $100, and then you got break even. And even trades that fail create opportunity when you have a plan. And that's one of my favorite things. So, guys, that's it. No questions. You guys are amazing. I love it when you guys know everything. Makes my job easy. So I'm going to go stretch my legs. I'm going to take a break. And when I come back, we're going to look at the charts that you guys have posted in the room. And we're going to talk about them, not about good trades or bad trades, but rather we're going to look at the momentum, the path, and where you entered. I'm going to read your annotations. I'm going to answer any questions that you have. So I'm counting on you guys. Give me the best information that you can. Tell me why. And if there needs to be fixing, well, then we'll work on fixing it. Me either, Joe. The only thing I know, the only thing I'm sure of, Joel, is that when I have these three together, my trading is pretty effortless. And there's not a lot of motion involved. And the further I deviate from the things that are giving me advantages, the more difficult my trading becomes. And the less likely my trading is to win. So It's hard. The hardest thing about trading, guys, isn't recognizing the patterns. Everyone that's been with me for a week or two is solid. The hardest thing that you'll ever do is committing to not doing anything when the rules aren't met. Sitting on your hands will be the most difficult thing you ever do. Guys, we are professional waiters. 90% of your day is doing nothing. So I'll leave you guys with the S&P. And it's weird that weak triggers is creating a push. And it's odd that not having that mid-band inside of triggers, I mean, just goodness gracious. The rules weren't met. A loss is avoided. And life is good. I'll be back in 5 minutes, guys. Go stretch your legs. All right, guys, let's get back at it. You know, I said earlier, and I mean it, one of the best ways to get to where you want to be isn't necessarily trading, but taking a picture. And I want you to see how much information there is in one picture. Here I have weak triggers. Anything can happen. Right? So when I see this look, I know that my advantage is gone. And then the second arrow, and this is where understanding those three concepts of terminations comes in. So this is not a clear path, large or not through, and then it can't be potential to break, no odds favorable momentum. So I have no potential trade setup here. And if I didn't believe it, I have three divergences, which is a termination condition, in no areas inside of favorable large triggers. And guys, this is where you've got to just take this all and say, no trade. And if you do the study, if you practice a little bit, this whole set will take you about 3 seconds to do. And what you'll find is that if you take longer than 3 to 5 seconds on your trade, you're probably breaking rules. And I know this from experience. But do you guys see that? We didn't take a trade, but we got a lesson on small chart terminations. We got a lesson on weakness. We got a lesson on termination conditions. And we also got a reminder that it takes momentum to potentially break an area. And guys, you just have to say no trade. Does that make sense to everybody? Not one trade was taken here. No money was lost. It was simply educational purposes. And look what happened. Pretty cool, right? And then these one-to-ones had the potential to break, and divergence printed. And the KISS plan says this is the #1 killer of a 50-50 trade. And that's 2 instances inside of 5 minutes that kept you out of losing trades. But what you're going to find, guys, is when you're bored, when you feel like you haven't made enough money, when you feel like you've missed a trade, you're going to start incorporating phrases like it should, it might, I hope, it's not but, and we call that showing me your butt. It's not a clear path, but I really think the momentum is going to carry it down. Well, it didn't. It's not momentum or a clear path, but I really think it's going to go up from the mid-band. Well, it didn't. Rules are designed to keep you safe, guys. Rules are designed to give you the highest chance of success as you learn these indicators. Andy started posting last night, middle of the night, and Andy says only one filled waning triggers from a pivot stop out room to target. So Andy, you're saying that with a tail end of momentum and a clear path, you're going to hop in right here at the 1-to-1s and you're going to hope everything goes up. How'd it work out? Is that the second part of it? Nope. So guys, this is cool. I want to know if it worked or not. I want to know if taking a momentum style trade with waning momentum was a good one, right? Did it work? That's the second half, guys. Because if you don't remember, so this one went to the target. Which one didn't fill? So it's just a one lot? That happens sometimes too. It's a great looking trade. And it went to the target with the clear path, with the momentum. That's the part I'm curious about. Eventually, well, yeah, it was the middle of the night. It's going to be slow, but it did go. Momentum and clear path for the win. Well, yeah, everyone's asleep. And it's Sunday night. You night owls will find that there's not a lot of action in the middle of the night. And then Pete, two, three, four, five pictures from Pete. 1, 2, 3, 4, 5. I love this. Pete's like, hey, Mark, here's everything I did. Let's talk about it. Yeah, nursing and day trading don't mix well. I was having that talk with my wife, Andy. She's like, I don't know when I'd trade, even when I learned this, because, you know, she's a director, so she's there Monday through Friday. I was like, I guess you're just going to have to go back to being a surgical nurse so that you can have the week off. She said, damn it, if I have to. So let's see what we have. Triggers rolled. Everything came up. And you entered right at support, right inside of the triggers. Great patience. Let everything roll and get in favor. And you held it up to resistance. And you decided to hold it a little bit longer and make a little extra money. And guys, there's two sides to this picture. The first side is that if you just don't have the in the moment ability to recognize that momentum may create a little bounce or something like that, getting paid at the line is not a bad deal. Pete has the experience to hold a little bit longer to recognize change, and it's a great hold. But in the beginning, guys, it's okay to get paid at lines. Lines are where decisions are made. And then everything says down, the path is clear, and Pete just jumps in and jumps out at trouble. Absolutely beautiful, getting paid. I love that you put that too. Get paid, got paid. Guys, that's the goal every day. You're learning how to get paid. Everything says down. Strength, clear path. Guys, one of the most important lessons ever. Pete says pull back to the mid band outside of large triggers. Waited for them to prove that they were actually going to go in the direction of the trade before the entry. And then great job letting it come back and get you after the reversal bar. And then once again, out at trouble. Do you guys see it? This may not be your trade. The area is not inside, but you'll get there. And you'll understand when it's appropriate to wait for confirmation. But momentum and clear path lead the way, guys. Pete putting on a clinic this morning. And then with the potential to break down here, you give it one more shot and it just doesn't go. 3-tick loss. Losses are a normal part of trading, guys. Understanding when the advantages are in place, understanding when you've got a pattern that's more likely to win than lose. I don't particularly care for this one, but I don't have to. Weakness and weakness, right? And he's able to manage out with a small loss. But guys, his timestamp is 10:33 in the morning, and he's up $2,400. That's not so bad, right? Well, Ollie, when he enters, he makes sure that he has room to where he expects it to go. And if it changes, he's not willing to give it all back. 2 divergences, weak triggers, area not broken. Pete's not going to hope that this 1-to-1 holds. Pete's going to say, hell, 2 divergences sucks on this look. I'm going to get out, I'm going to take a little hickey, and I'm going to wait for a better opportunity. So I think his stops are pretty loose initially when his indicators say that they can be. And as he gets into areas that could stop his forward progress, that's when he tightens up. He's got a good plan, and it's consistent. If you go back and look at his last 100 trades, they almost all look the same. So here everything's going down. Momentum is slowing, but the path gets clear. The triggers break, and Pete says, I'll take this one with the clear path. And normally he'd be out once the third divergence printed, but with the clear path and everything down and the move, he says, I'm going to give it a shot. I'll keep my stop 5 ticks or so above these trigger lines, and we'll see if it goes. Accepting the risk because of your chart read. Saying to yourself, I realize it isn't perfect, but I feel like I have more advantages than disadvantages. I'm willing to hold this trade. And you will get to that point. But it's going to revolve around your ability to recognize advantages. And then Ron, the king of the clear path, when everything says up, when the momentum is strong, when the path is clear, Ron gets in and gets out, and it gave him an extra 3. It hit so fast that it gave him extra money. Nice trade, Ron. Momentum and clear path. He just jumps in, doesn't even wait for a pullback. You will find your way once you get there. Second higher divergence. Everything says up. Perfect entry. Right? And Andy, waxing triggers, but they are up and they're accelerating. Potential to break. Higher divergences. Great entries create manageable trades. I hope it got you. Up, 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 no divergence, up, area inside of triggers, no risk as you get close to trouble. Beautiful, Andy. Is it a high probability trend trade? Nope. Is it an awesome chart read? Absolutely. And that's where you're headed, guys. Allowing your chart reads to tell you that there's enough advantages so you feel comfortable risking your money. And then Wayne, there it is. Ah! HVA bars exceed 8.3. White bar entry. You can't turn off the dots, Wayne. If you turn off the dots, you lose the market flow chart. You lose the HVA lines and everything. So you're stuck with them. Looks like you paid attention in John's class, though. Termination, fast triggers roll, white bar, get in. Make money. Termination, triggers roll, white bar, get in, make money. Termination, triggers roll, white bar, get in. White bar, get in, make money. Just a little different look. Nicely done, Wayne. But you can't turn off the dots, I'm afraid. They are an integral part of market flow. I haven't seen one in the room yet, Gary. And there it is, Andy. Same trade. First target, out with the divergence. Beautiful trade. Yeah, and Wayne, I'm telling you, my brother sees patterns that floor me. And he reads charts so quickly. But the one thing that when he comes to this room and he teaches you guys is he begins to assume that you understand termination conditions, that you understand momentum, that you have those basics down, and then he loves to share ways to make more money with the software. And that's the only thing that I encourage people to remember is that it's important to have a foundation. And once you have that foundation, there's so much opportunity out there. But there's so many people that try to find everything before they get the basics. And those are the people that typically struggle. And I don't like to see you guys struggle. I want everybody to have success. And then Andy, strong trending market. Not sure how you picked your area. Oh, you just jumped in. You jumped in on the way down, not up. That's okay. You make a little money, make a little money. Nicely done. You were up 650 Friday doing the single contract. Wayne, the first time I got his new setup, my first day, I kid you not, and not that I'm a badass, but I just followed rules and then used those HVA lines a little bit. I made like $5,500 on a 2-lot. But it was taking my understanding of trend trades. It was taking my understanding of momentum trades. And then what he brought to the table gave you just a little extra. And it was pretty cool. Andy, sometimes in a strong trending market, you can pull it off. Nicely done. But I've said it before, I'll say it again. You've got to know what you're looking for. And you got to know why. Odds favorable, clear path. Get in, get out, break even. There are no market flow trades, Wayne. There's trend trades. There's momentum trades. There's high volume area trades. There's not market flow trades. Market flow is a confirmation tool. Market flow is a confirmation. So, for example, if a termination condition holds, right, and you're thinking about going the other direction, you may get a market flow signal. You may have the momentum that you need to confirm it. You may have a pattern for management on market flow. But I think one of the misunderstandings is that there's this magical market flow that it creates opportunities that aren't there. And I'm trying to find a picture that my brother sent me this morning. And I'm going to share this one with you guys real quick. So termination leads the way. Large chart leads the way. Divergence from the termination. So what does that mean? And this is the part that I want you guys to get that believe market flow is magical. 4 charts confirm a potential bottom. That's what leads the way. Small triggers roll. That's what leads the way. And then finally, this green line, this HVA line, Wayne, says, hey, if you're going to take a shot against the downtrend, if you're going to take a shot against the triggers down, if you're going to take a shot hoping that this area holds, this green line shows you the best potential spot to take that trade. Does that make sense? So it's not that it's a market flow trade, but rather it's a termination with the triggers rolling, and this just defines where your highest chance of success is most likely to come from. Does that make sense? So your white bar trades are nothing more than the same thing. It's a termination followed by a trigger roll, followed by that market flow indication through the white breakout bar looking for the trade. And then the one up, one down trades, those aren't really one up, one down trades. Those are management opportunities. It's just a pattern when you have odds favorable momentum, when you're in the trade, when everything says up or down. What you'll find on a market flow chart, I don't even have a picture of it because I don't know that he's even using it anymore, is that there's a pattern that comes true where if you have odds favorable momentum on 3 different charts, Wayne, and you get a down bar on your market flow chart, you can enter the market hoping for an up bar, and that's all it is. And without any pictures from you, it's difficult for me to just teach it because that's an entire class. That's something John Novak spent an entire week teaching very specifically. But this bad boy right here gives you the rules, gives you the looks, gives you the education behind it. And then if you go through that video and bring me snippets and stuff like that, yeah, it's easier for me to talk about your trades, Wayne, but it's still real important that you show me all your charts. Don't just show me a market flow chart, because I could use this chart and say, all right, well, you should have been long here and you should have been long here, and I guess that was a short and maybe that was a long, and why didn't you go long there? And with the triggers down, with the one up, one down, why weren't you short right here and taking it down? Does that make sense? So make sure you show me the other ones as well. But that one up, one down pattern, whoops, this is it right here. When you have odds favorable momentum, you're going to see this a lot. Everything's going down. See the trigger look? You get this up bar and you sell it, and your stop chases behind this, and you're counting on a down bar with momentum. So if you're already in a trade, this pattern gives you a new stop placement. If you're not in a trade and the path is clear, maybe this is kind of what it looks like when you get one of those momentum trades on that entry chart. But one up, one down, even with, you still have to respect terminations and stuff like that. So there's more to it. I love it. I'm a huge fan and I'm happy to teach it, but I have to see all your charts, all your information. So I'm excited about you bringing that to the room. I think it's going to be a lot of great education for everybody. And then Andy, we saw yours, I believe. Yep. So where are we? Is that everybody? Not yet. Kenny. Kenny says, Mark, to hell with your eyes. I'm going to give you the smallest chart I can give you. Let me figure out which direction you went. So guys, this is kind of a beautiful example. Kenny, I'm sorry that you had to be the one. No, you're good, dude. So check it out. Kenny, are you ready? Did you have a good top? Did you have a strong top? No, we didn't, right? Because the triggers got through the area, which means that this wasn't a no triggers through termination that reversed the market. You didn't have a clear path. Do you see that as well? You called it 50-50 momentum. So you recognize that the path isn't clear, but the momentum is. Is everybody with me on this? Kenny was nice enough to show you guys a great example of what happens when you try to incorporate new shit without having rules. Pardon my French. You had divergence on a 50-50 that's not from a good top. And Kenny, this is a pattern that loses way more than it wins. But because you had that pink HVA line, you said, hell yeah, I'm in this trade. And you got ransacked for 6 contracts. And Wayne, this is why I said, let the large charts tell you. Let your other charts tell you. That it's time to take the trade. And then when your rules are met, let these be little confidence builders. Does that make sense, Kenny? And then, yeah, Paul, I rolled mine. The volume was split just a little bit in the advance. Yeah. And Kenny, it's okay because what happens, guys, is when you start to incorporate new things. And let me say it, I love this new chart that my brother's introduced to you guys. But this pink line, which you got excited about, I would have gotten excited about it, right? This pink line doesn't negate your rules. But if your rules are met, this pink line adds like another level of, yeah, what a kick-ass trade. And that's why I was telling Wayne, show me your other charts too. Make sure that you're using this market flow stuff as a confirmation, not as a bypass. Does that make sense, everybody that's all love struck with John Novak's new charts? So Kenny, bad top and divergence. And that's where making sure that you understand the very core is, it's going to keep you out of a lot of trouble. It's going to keep these pink lines from talking you into trades that you shouldn't be in. Good stuff though. I mean, great entry, great stop placement. It didn't work, but good stuff. And a great lesson, I think, and a very timely lesson. A very timely lesson because it just jumped right onto. And guys, one of the things, when my brother comes into this room and teaches something new, what you guys don't realize is that he spent the last 60 days fine-tuning and working on it. So if you're coming in and you're like, you know what, I'm going to do this smart John Novak stuff, it's important that you understand. It's in the resource page, Jerry. If you go to resources and download the indicators, it'll put it on there for you. That's the easiest way. That's the lowest maintenance way to do it. And then Paul took a... You're going to get me lying here. Hold on. CL with market flow overlay, ES with market flow overlay, NASDAQ with market flow overlay. Here, I'll tell you what. Don't go to the resource page. Let me make a zip file real quick. I'll just drop it in the room for everybody that wants it. I'll save you guys a little work because you're all my favorites. Give me just 1 second. Compress to a zip file. There you go. You're going to have to put that into Documents, NinjaTrader 8, Workspaces, and that'll get you there. And then Pinyeski, are you with me in here? Did you hear me that I did roll ES? And guys, crude will roll in the next couple days as well. Guys, this is one of those instances, and Paul, I'm just going to use your chart to give a lesson here. You came 1 tick off of a major time frame resistance, 1 tick off of the resistance, and there's odds favorable, and there's a clear path, and there's a perfect entry. This is one of those times, guys, where I like to remind you that when fibs come to be, fibs are born through about 10,000 calculations. Every one line that you see on your chart is thousands of calculations, ups, downs, extensions, projections, retracements, and then your software, the algorithm comes through, and it designates which lines are important and where the highest concentration is. So every one line that you have comes from all of these different calculations. So if you're 1 tick off of an area, you're probably trading into a giant accumulation just below or maybe above. So I start using things like, well, if divergence prints and I'm 1 tick off, maybe I wait for a reversal bar marker. Yeah, my Texans pulled it off. The first half was way better than the second half. Guys, all of these fibs are thousands of calculations. And if I'm 1 tick off, you have to make the decision. And Paul, it was a good decision. Great entry. It's my opinion that is way too much risk. In at 53, if it blows past that mid band, get the hell out. Take a little hickey, right? Because I'm going to John Novak you real quick. Is that where you really want to enter a long? And even more so, once you're on the wrong side of the trigger, is everything down? You don't mind a down bar or two on the 13 too? Okay. Everyone has a different plan. That's the beauty of what we do. Everything is individual. It's a great look. It's a nice setup. Mid-band's on the wrong side of the triggers. Those 1-to-1s for me would have been the bounce point that I trusted wholeheartedly. But I know you have a plan, so I won't mess with you. Strong trigger. No idea what you call these. Wrote all my thinking there. Tear it up to bits. You got it, Jen. Am I going to tear you up? Why? All right. So you want me to beat you up and then celebrate, or do you want me to celebrate and then beat you up? Doing stupid shit. I love that. You can't say it, but I can because I have a microphone. So let's look at trade 1. Termination. So let's go through the whole process, Jen. Things that maybe you didn't add. Because this right here has a lot to do with why you did that. So this is a bad top. It's not a termination, and that means the buyers in this strong trend did not reach a key area. Does that make sense, everybody? This pivot came from the middle of nowhere. So the buyers who had been crushing it for the last 20 minutes, didn't make it to that fib. And guys, when I say they know where these fibs are, you've got to believe me. So the sellers say, hey, guess what, buyers? We're going to steal your momentum and try to push. And they reach Fibonacci support. And not one of the triggers breaks support. The large triggers don't follow along. So Jen, not only do you have a termination, but you've also got the gap theory, and it's coming from a bad top, which suggests patterns that repeat themselves, that this market is likely to at least get to this fib, if not further. Does that make sense so far, everybody? When I have a bad top, and let's see if we can find an example or two of it. When I have a bad top, very often the market tries to go back up. When I have a bad bottom, very often the market tries to go back down. And you see it a lot. The market goes up, bad top, boom, boom, heads up. And it's just a pattern that repeats itself. You were long at 79.30, right? So it's hard to see on here. Let me open up your chart real quick. You were long at 70.34, which means you were long right here. After the termination, after the large chart, small triggers come up with all sorts of strength. After the large triggers turn and roll, so everything starts to go up. And you say, you know what, there's no divergence, there's strong triggers, there's a mid band, let me take the long. But you trade directly into a fib. And then divergence prints. And Jen, honestly, you took a chance here. More often than not, you're going to lose that trade. But you managed to hold on. So clearly, there was some drinking yesterday. Not really, I'm kidding. But it does go up. And then you get out of trouble. But that's up here. And that pulls right back to support inside of triggers with momentum and almost a clear path. And then you take it up to trouble again. So this look, you wait for the reversal bar. I love the second trade. I think the second trade is beautiful. You've got every advantage and you know exactly where it's likely to go. The first trade, you're taking a chance. Can we agree? And reversal bars don't guarantee a win, guys. If you're trading directly into a termination condition without momentum, a reversal bar isn't going to guarantee a win. All it's going to do is it's going to give you a place to put your stop. And Jen, you even said, to hell with the stop. I don't know where you put it. And that's okay. I like that you did. I'm still going to look for the advantages. I like that you waited for it to go up. The challenge is that you held through this. And right here, I would have been so nervous. Was your stop behind the one-to-ones? Cool. So you were willing to put $170 worth of risk to try to continue with a strong trending market. Does that sound fair? So you didn't just do this because you were scared that the market was going to go without you. You made a calculated choice because of a bad top, a termination, a trigger roll, momentum, and every indicator on your chart saying up. It doesn't sound so risky when you say it like that, does it? So I think that's and Jen, if you had gotten out at the line and re-entered here even, get paid a little bit because it isn't perfect. And then here, use the exact same reasoning to get back in at the same price and less risk. But I think that it was a calculated risk. And I think that you were taking the overall look of the market, letting the large chart lead the way. I think every indicator on every chart set up. And the only one that you get the yardstick to the top of the hand on is holding through divergence from a termination with no areas inside of triggers, because that mid band was down here as it was coming up. That would be the only part where I'm like, ah, Jen, let's see how often that works for you. And your strong trend is over. Once this reversal bar prints, your strong trend, it's got to reset at that point. It's no longer a strong trend. Everything changed. It's okay. You're good. You're good. It's a calculated, it's a trade that is initiated by a read, not rules. And guys, it's a slippery slope. It's not my place to tell you how to trade. But guys, your chart reads are going to fuel opinions because I'm great at reading charts, right? I've been doing it for 5 years. And I can say to myself, man, with this level of momentum, my brain will say, oh, look, no divergence. There's a mid-band. Take the trade. Take the trade. And that little devil on my shoulder says, look at that. It's beautiful. And I'm willing to look past a termination condition. And then when I start to piece it together, I got to realize that it's a bad bottom. And maybe they want to get to 58. And it is a termination. And I might get seduced by this small chart to take a trade that doesn't fit because the opinion that I formulated based on this momentum, based on no divergence, I don't have rules for this trade. And it does become a very slippery slope. And it's not uncommon to see people, when they get comfortable with their chart reads, to really start breaking their rules. And then almost having to have that frustration reset. No terminations, 50-50, odds favorable, coming from a termination because of divergence. Because Ollie says, Mark, I'm sick of hearing you say divergence kills 50-50 trades. I'm going to force it to go in the direction of the trade before I ever enter. I'm going to get paid right at trouble, and then when a second divergence prints, I'm not giving anything back. I'll give it a shot, but I'm not giving it back, not with 2 divergences. So, Ollie, I like it. Getting in, managing it, making sure you get paid, and not being willing to lose when things go sideways. Wayne, you were looking at all 3 charts? What did they say? Post a picture with what they told you. I'd be interested to hear what you thought. Morgan, strong top, odds favorable, 50-50, divergence on a 50-50, but was right after a strong top. So your rules say that there's no we, that you can take those, but you still let it go down, and you get out of trouble. Morgan, oh, no worries, Wayne. You had a reason for everything you did, didn't you? And it started with a strong top, and then it was coupled with momentum, and then you said, let me define my path. It's not clear. And you said, because my path isn't clear, guys, I'm just going to give you Morgan's voice real quick. Because my path isn't clear, it's important to me that I have a great entry. Divergence, I know, is problematic, but because of the strong top, I'm willing to take a shot, but I'm not going to get it on the way up. Rather, I'll get it on the way down, going in the direction of my advantages. And he says, because it's not a clear path, I'll just get paid at the first sign of trouble, get the hell out, and wait for the next trade. It's perfect, Morgan. Great job. Great trade. And when you have those 2 contracts and everything is good, that's where you'll take one off here and let the second one run to those 1-to-1s, right? Make a couple extra bucks every trade when it looks that good. Very nicely done. And man, strong trending market. Everything says down. Let me line up your entries real quick. 44. So you're in on the pullback to the fib, on the wrong side of all the triggers. And you come down. And you get paid on the way up. which is odd, and then you get paid on the way down. NASDAQ is stupid, scary, fast. It is. NASDAQ is stupid, scary, fast, isn't it? Wayne, you said that John did a few live trades Friday, some after 3 to 4 divergences, and none of them worked, huh? And Wayne, I'm glad that you said that. I'm glad that you said that. And guys, if you try to trade like John Novak, then, and it was good to see stuff that doesn't work. And Wayne, the difference between my brother and I, our chart reads are exactly the same. When we talk, we are 100% consistent on our reads. John's pain tolerances are much higher than mine. Because my brother reads faster than I do. And he's willing to take more risks than I am. And the reason that he'll do that, and Andy, part of it is when he's on sim, he'll create the lesson. The same way I will. The same way I'll break rules in a trade and say, guys, we broke our rules. Let's see what happens. That's what simulator's for. But Wayne, one of the amazing things about my brother that you guys don't see is my brother will say, I know it's a termination, but because of this look, I'm going to enter right at the best spot, and I'll take half my profits here, and when I even get close, I'll get paid. And John Novak can manage so aggressively because of his ability to read charts. I've watched him take failed trades and make money on them. And guys, you're just not there yet. Most people aren't there yet. I'm not there yet. But remember, he's 27 years ahead of most of you. And what John Novak shows you is what happens when you're really in tune, when that flow is good, when the mojo is solid between you and your charts. There are so many opportunities to be had. And he sees patterns and makes decisions on things that most of the world doesn't even recognize. So learn from him, don't try to be him. When John Novak introduces new stuff, people blow out accounts because they try to trade like him, and they abandon all of their rules and they think they're following his lead. And he and I used to always fight about it. I'm like, stop breaking my class, John. But I think it's brilliant. You see the potential. But you guys know the basics. And once you know the basics, you begin to make decisions. Jen was a great example of that on her long trade over here. She was able to make decisions based on her ability to read the indicators. So let's see what happens. Good top. Okay, back to rules-based, Jen. Back at the price clears trouble. Didn't clear trouble here. Down, down. Nice. Beautiful trade. Jen, the only thing, if you're really being a stickler on the chili dog, is this is your bar. The next bar is your bar. Clearing the trouble on the small chart as well. And then it's 100% clear. And there's nothing to potentially create a bounce. Beautiful trade, though. That was the one thing. That's the thing that's bumming out my Jen as she learns this trade. And she's like, but there's always something in the way. I was like, there's not always something in the way. You just have to let it pass because your likelihood of success goes up. And we were driving to Austin yesterday, and there was a big semi next to us. You should. She's amazing. There's this giant semi next to us, and I looked, and I pointed at it. I said, hey, that's momentum. And she's like, ooh. And then I said, do you see that sign? And she goes, yeah. I said, that's your fib. And I said, once that whole truck gets past the fib, past the line, nothing's going to stop it before that next fib. And she's like, oh, good analogy. So the chili dog, Wayne, Ron C gets full credit for this. So Ron C used to come to my classroom, and he would say, hey, Mark, let me give you some heartburn. Let me not wait for a pullback. And I was like, dude, Ron, you're killing me here. There's no pullback. You're not following rules. And Ron said, to hell with you, Novak. I'm following my rules because I've done my study. I've taken my pictures. And I know what I'm looking for. And what he found is that with this look, with all that momentum, When the back of the bar clears trouble, it means that price has gotten past the decision-making point. Does that make sense, Wayne? I swear I'd never teach this trade, but so many people are taking it, I feel like I have to. Once the back of the bar clears, what you've done is you've let every ounce of price get through the trouble area. Once the back of the bar clears trouble here, you've let every bit of price get through the potential trouble area. So if you've got strong triggers and room to make $110, it is a get in, get the hell out, quick little shot, boom, boom, done. That's all it is. It's a jump in trade. It's a JTFI trade. It is a jump the fudge in trade. That's all it is. And it relies 100%. Remember when I said once you have momentum and a clear path, it's just ridiculous the opportunities you can find. That's all this is. This is Ron's very basic understanding of the high probability trend trade, understanding that decisions are made at fibs, knowing that he doesn't want to be a part of that decision process, and then trusting the momentum from the trigger lines to get him what he calls, every time he annotates a chart, a base hit. Because every 4 base hits is a home run. It capitalizes on momentum. It capitalizes on the clear path. And it shows a complete and thorough understanding that getting paid is the goal. And that you don't have to have a home run every time to get paid. And then Ron's like, well, let me go ahead and give Mark the heartburn that we talked about. And then here's the other side of it, right? There's your top, there's your momentum, and if you just jump in because of the momentum, divergence and closes on the wrong side is a loss of momentum. And Pete takes a loser, and that's part of it. And then when he gets back on the correct side of the small triggers with this look, he's able to get paid. And he's able to get paid. The indigestion trade. And then you're absolutely right, Jen. Like Ron C. always said, you've got to understand the basics first. It's not a next-gen momentum trade, Jerry. And which one are you talking about? Are you talking about this? This is Pete's trade. So, it's Pete's rules. I'm not sure. On the tail of the 5-1 at the fib, where at? Right here? I'm not sure where you're talking about, Jerry. Sorry. Or are you talking about over here? I'm confused. Happens sometimes. And Gary, your trading's improved when you let the large chart lead the way. Crazy, right? This right here. So this isn't a momentum trade. This is a jump the hell in, Jerry. This is him hoping that momentum carries him where he wants to be. But I want you to see something. The back of the bar, I don't know that it cleared. It may have. Isn't that funny, Ollie? So he just jumped in, Jerry. That's all it is. And then when momentum died, he held it a little longer than he needed to. And then when the large chart said go down, he got to the right side of the triggers and went down with it. But there's not a next-gen momentum trade in there, anywhere. There's not a next-gen top momentum trade anywhere. This is Pete's plan. 70-42. So you're saying get in right here with this reversal bar? You could, for sure. He did. He just let it get to the other side of the triggers. That's it. He waited for the confirmation. but he let it get to the correct side of the small triggers. Because as long as you're left at these small triggers, the market tends to move in whatever direction it's moving. So check this out, Jerry. Everything's going down. Once he gets to the right side, the incorrect side of the triggers, it goes up and it continues up until the reversal bar on the other side, and then it goes down. And he never gets a close on the wrong side of the triggers, and it continues down. That's such a powerful look. And he just kind of takes advantage of it. Which is why if I enter here and I get a close on the wrong side, super low, like that's it. That's my exit condition. I give up a couple ticks and then I wait for this trade. And then Jerry, I've literally chased trades. If I was in this trade with my stop on the reversal bar marker on the wrong side of the triggers, and if I never get a close on the wrong side of the triggers, man, I've held some of these for, 20, 30 points because it just never happens. Good way to do that breakout. Does that make sense? And there it is right there. It just continues down. There's your first close on the wrong side of the triggers. What an awesome way to hold that last contract. And then once you get that close on the wrong side, absolutely you give a little back. But if it just rails, and then now, look at this. I'm on the left side of the triggers, and it doesn't go down until I get a close on the wrong side. And now I'm just patient. Pretty cool, right? I love it. So when you start trying to hold for bigger moves, that's a pretty cool little lesson. Absolutely. But the thing is, though, is if you get your 100 and then the reversal bar, very often, if you're just jumping in, you're probably break even or even down a tick or two. So I tried the runner on the chili dog. My brother and I did it, and I tested it, and I was 0 for 5 on making money on the second contract. Why? Because the whole idea of that trade is capitalizing on very quick hits. Momentum doesn't do this very often, right? It more likely does this. It more likely does this. That's why it's a quick hit. That's why it's quick profits. And then I love this trade, but I hate this trade. I actually had someone email me this morning talking about this very pattern. Weak triggers, divergence prints. He gets to the left side of the small triggers and takes it up to the reversal bar on the large chart. And it's a quick hit, but Jerry, do you see how he's left of the small triggers? Everything's patterns. And that's one of the ones that entries have got to be the first piece of the puzzle, right? Getting in with an advantage. And then management will change. Your whole life management will change on your ability to read the indicators. And then guys, I'm going to say this. I'm going to read Ollie's post in completion here. Getting better at entering trades since I started worrying less about losing trades. When you stopped expecting to win every trade, you'll start winning most of your trades, guys. And when you stop worrying about the result, but you care about the execution of the method, that's when life changes. That's when trading becomes easy. That's when you have the trust in the methodology. And that's when you find yourself saying, I don't care if it wins or loses. They're going to have to come take me out because my stop is exactly where the market shouldn't go. And then Pete trying to go short from the wrong side of everything directly into a termination condition, and it just doesn't work out. Amen, Ron. Once the high probability trend trade is second nature, you will see other trades. Don't ever take a trade because you saw him take it. Amen. Switched on sim because this one is low confidence, mid-band way above triggers, waited for reversal bar for entry, stopped out. And guys, that's intelligence too. Pete wanted to keep busy. Any him, yes. Pete wanted to keep busy, but he knew this was low probability and he wasn't willing to risk money on it. Pete has a plan. Pete knows his plan. Pete follows his plan. So when you knowingly break your plan before you're good at following your plan, you're teaching yourself bad habits. Jerry S., do you notice that he got in on the left side of the small triggers? Never had a freaking chance, did it? Never had a chance. Pete knew that. That's why he didn't put his money on it. But he said, wouldn't it be fun just to stay busy, to see if it continues down? Do you see it though, guys? If you're going from the wrong side of those triggers, you better have some reasons. But Rod's exactly right. Don't get into trades because you saw somebody do it. You may not know all the rules. Sorry, Kenny, I didn't mean to come back and rehash old wounds, but I don't know, Jerry. I don't have a market flow chart. I don't use a market flow chart. I really don't. Don't even bother with it. Couldn't care less. Let's do this. Hold on. Let me pull up John's chart and let's see if there was an HVA line there. What is this, crude oil? Absolutely, Gil. And I'm going to do my best not to be a smartass here. No guarantees. Because it really is pretty simple. And I'm going to open up my small chart. So when I say left of the triggers, Gil, I mean that 100% verbatim. Really no room for wiggle. So check it out. Here's your small triggers. And I'm putting this white line on the small triggers. And I'm going to put it on this line as well. As long as my price bars, let me do green since it's going up. As long as these price bars are left of those triggers, the market continues up. And then once they get, let me do a color that corresponds. Once they get below those triggers, Gil, do you see it? The market continues down. Here they didn't close. Here they didn't close. Here they didn't close. That's the first close on the other side of the triggers, and that was the first push up. Pretty cool, right? So when I say the left side of the small triggers, it's true for longs or shorts. No, you're good. And what we call this is the momentum phase. It's funny, I'm visual, Gil. So if I hear left side of the triggers, it helps me to see it. It helps me to see this example. So if you just jumped in and you were wondering, if you didn't take the base hit, your triggers told you that it might go a little lower. So, uh-oh, I just closed out my chart. So let me get that crude oil. Let's take a look at it, guys. We're done with pictures. Nothing on crude oil. Nothing. There was a termination. There was your white bar. Jerry, you can see it. That was your white bar. But there really wasn't an entry. It didn't make the HVA, so it wasn't an HVA trade. There's no trend trade in here. And it just kind of straight lines up to resistance. So you've got to be willing to accept that sometimes there's just not trades. Too many Novaks in your life, you bet it'll confuse you. Sometimes you just have to believe that there's not a trade. And one of the most common questions that I get, and this is one of my favorite ones, is, hey Mark, where was the entry? right? The market dropped 25 points. Mark, where was the entry? And what people hate to hear is that I didn't have any rules met. That's not my money. I couldn't find a statistical advantage. That's not my money. I didn't have a pullback to an area. I didn't have a momentum style trade. It's just not my money. And when you get a plan in place and you prove to yourself that you can win more than you lose, and guys, you will get to that point if you're following a solid plan. The idea of not my money isn't so devastating. Those are my brother's words. Those come from the other Novak Gen. But the idea that every dollar isn't your dollar, it's almost a relief because you get to pause and breathe and not try to chase the market. And my brother's analogy, and it's so true, if you walk into the bank, Rob knows it's coming. If you walk into the bank and you say, give me all the money, you're a bank robber and you're probably going to get tased, shot, and hogtied. But if you walk into the bank and you say, give me my money, please, right? If you say, give me my money, the money that fits my plan, well, now you're just a customer and you're going to walk out of there with your money. Right now, you're learning what your money is. You're learning what looks are your looks, what trades are your trades, what entries are your entries, and what management is your management. And as you work through that, my job is to hold your hand, to help you see advantages, to tell you when you're giving them away, to show you options to maybe take them better, and to give you little nuggets of wisdom that maybe help you learn to manage trades a little longer, to make a little more money in the market. So, guys, that's the second hour, and we've made it through every picture. And Pete, that's why you switch to sim unless you have high confidence and rules met. It's the same psychological rush without the risk. And Pete, when you know that you're going to switch to sim, don't you also know that you're probably going to lose that trade? And if you win, it's probably just luck. Or that it's, yeah. So guys, not everybody has the mental capacity. I don't. Getting lucky kills the next week and a half to 2 weeks of my trading. If I start breaking my rules but get paid anyway, that is a recipe for blowing out accounts. Because I begin to feel invincible when luck pays dividends instead of rules. And that's why I just trade rules. That's why I don't trade indetermination conditions. That's why I don't look for areas on the wrong side of triggers. That's why I insist on odds favorable momentum. Because there's too much money to be made easy. I don't need the hard. I don't need the difficult. And that's just my own personal brain. And your brain may be different. My brother and I don't trade the same trades. And that's great, Jen. When you know you break your rules, I love it. That's accountability, right? That's you saying, hey, Mark, I need to hear someone else tell me that I was just a dumbass so that I'm not a dumbass all day. And I'm not calling you a dumbass. Forgive me if it sounded like that. But I do that sometimes. I send my brother pictures. Dude, I just broke my rules and got slaughtered. And he's like, well, don't do that. Oh, thanks. I get comfortable with you guys. So guys, that's the second hour. I'm going to take some time. Let's watch and see what happens, right? And then when I come back, it's your classroom. So if you're using John Novak's new charts, post your trades. Let's talk about what we see. Yeah, without a doubt, Pete. If you are working on a new trade, post it. Let's talk about it. If you're working on management, give me an opportunity to help you. Guys, the biggest challenge with this classroom is I can't see you if you look like that. And you're like, I have no idea. I don't know what's going on. What the hell? What the hell is he talking about? I can't see you. You have to post. You have to tell me that you're struggling. You have to tell me that it isn't clear. And I promise you, I will find you clarity. So why don't you guys watch the market bounce in between fibs for a second? I'm going to go reload my water, high five my dog. When I come back, this class belongs to you. So if you're new, if you're old, if you're confused, it's going to be on you to post in this room and give me something to talk about. Otherwise, it's going to be this awkward silence, and nobody wants that. So I'll see you guys in 5 minutes. As much as I like seeing pictures of your trades, I love seeing pictures of your dogs. That's awesome. That tile is probably nice and cool for them, Pete. That's pretty cool. A shower in the office, too. You don't see that a lot. Oh, you're in Arizona? Nice. Mav in the shower. I like it. Hey, Alejandro. Welcome to the room. Do me a favor. Just post your question in the room. I saw the hand go up. That's okay. You might have just been saying hello. I think sometimes people do that as well. So guys, what do we see on crude oil right now? Let's go through our very basic chart read. And if you don't mind, I'm just going to take a picture. And we're going to go through it. So the first question that I always ask myself when I'm looking at a chart and I'm wondering if there's a potential trade is, do I have... Awesome. It's nice to have you in here, Alejandro. Do I have odds favorable momentum? Guys, the smalls are below the large, but notice how the large are flat. Someone said in this room once, and it stuck with me, flat triggers have no boogie. That was the exact word. What does that mean? Guys, triggers must be wide and angled in the direction of the trend to really give you that momentum. So don't really have the best look for momentum. And then just in case you're easily tempted, do I have a clear path is always my second question. And here price reached support. The triggers are above support. So this is a termination. No clear path. And are you guys ready for the golden goose, the keys of the kingdom, the best of the best? If my rules aren't met on the large chart, I'm not even looking at my small chart, guys. I'm done looking. I'm going to find something else to occupy my time instead of trying to convince myself that this mid-band is my best chance of success. Such a bad trade that made money, and why do you have to continue to put money in your account? Because you take more bad trades than good trades. So let's see what you did. Ed, can I give you 2 things to think about? Yeah, did you like that, Ron? I didn't fix that one because I liked it. And Pete, I think that's one of the best things ever, that you minimize your small charts. Ed, you've been sitting in the room, right? I'm not even going to look at that garbage market flow chart that you had, because you don't need it. So let's do this. Ed, you're not going short, right? Not into a termination condition. No chance, not going to happen, won't do it. That's the wrong direction. Can we agree? Hell yeah, you can. And then what else happens, Ed? See how those small triggers go absolutely rocketing off of that termination condition? And do you see how you're on the right side of everything from that termination condition with the strongest small triggers you could ever hope for? And then, Ed, do you remember that lesson that as long as you stay left of these triggers, it's going to continue up and until you get a close on the wrong side? Were you in here for that? So, Ed, maybe you just don't have rules for it. But if I'm looking at your chart, let me know what you think about this. Heard but didn't listen. Yeah, I'm used to that. When the large chart has a term, the small chart, small triggers roll. I'm above all triggers. Go long to see if that term is going to be a bottom. If I get a close on the wrong side of my smalls, I'll exit. It's just a jump in, Ed, but you're jumping in on the right side of things from the perfect termination condition. And this is the momentum trade that Nexgen teaches. That's all you took. You let a termination happen. You let the small triggers roll. It snaps right back to them at an area and continues up. Your entry was actually at 56.75.50 right in here. Does that make sense? But the thing that brings you success, I think more than anything, is that look at where you are in relationship to these triggers. And guys, I'm telling you, it's damn near impossible to give it back as long as you're left of these triggers. And then Wayne, if you're looking, check this out. Termination, Smalls cranking up, one down, one up. Ed, you took the perfect entry. So let me go to the other side of things, Ed, because I understand your trading and I know your patterns and I've seen you do it. So instead of going long here, Ed, what you have been notorious for doing historically is going short right here, and then short right here, and then short right here, because you believe that that market has to go down. Does that make sense? Is that fair, I hope? Guys, I will recognize your patterns. So I think what you did is you just started the process of eliminating those shorts from your arsenal. Because now you're going to start to believe that as long as you're on the wrong side of these triggers, on the left side of these triggers, shorts are financial suicide. So, well, those are termination. Let me see if I can find an example. There's that momentum. I don't know. I like the trade, Ed. I'm not going to lie. I like the trade because of the conditions. I like the trade because you had a termination, because you were on the right side of those small triggers. And guys, which termination condition is going to win? We need the small triggers to break. We need to have that potential. And remember when I said rule number 2 will probably keep you out of consolidation? There it is. But Ed, this was your trade. It's a pivot stop out at support, no triggers break. And here's the part you didn't show, Ed. You had 2 divergences off that fib as well. You had every indication that this line is going to stop that market. And then your patience to wait to get to the right side of everything, freaking amazing, dude. Virtual high five coming at you. That was a good one. And then Steve Diego, last week you had more random shutdowns in NinjaTrader, so completely uninstalled, reinstalled NinjaTrader. So far, all good. Quick question, is the default to load 10 days? Yeah, the default is 10 days, Steve. No, Ed, get that out of your head. That's why you lose, Ed. How much money did you make on that trade? Steve, it is 10 days default. That's a pretty good number, yeah. You made 3.5 points. How many contracts? So you made $175. So that one trade, if that's the best you did every day, puts you right around 50 grand a year. Who cares about the meat on the bone, Ed? Just do that twice. Do that 3 times. Do that 4 times. We all have this cockamamie idea that we have to make all the money. Guys, you don't. You have to make some of the money. And just do it 2 or 3 times. So if you were thinking of going short off the termination, this is where John's chart starts to give you a little bit to think about. What do you guys want to talk about? Jen, did you chili dog? Ron, did you catch that one? Was there room? There may not have been room. It may be, Ed. I don't know if there was room. I didn't do the math fast enough. You got to find what works for you. And I think one of the easiest ways to find what works for you is find what doesn't work for you. That's what simulators for. We haven't done this exercise in a while. I want to do this. And I don't know if you guys have ever done it or if you're even interested in doing it, but I'm going to do it anyway because nobody's asking questions. So guys, what is your thing? What is the one thing that costs you more money than it makes you? Right? What's the rule you break? All my smart asses come out. What's the look you fight? What costs you money? Too early, right? Okay. So Spice, you have the fear of missing out. That's pretty much it, right? That's what getting in too early is light beer. Like, so Spice, one of the easiest ways to break that fear of missing out is trust. So if you look at, watch this, I'm gonna do a couple of them. Trust in the entry, Spice. Believing that when you have this look on the large chart, it's going to come back. It's going to come back for you enough that you can build a career around it. So how do you develop that trust? You've got to see it 100 times, right? Spice, one of the things that I don't see from you, and forgive me if this feels like I'm coming after you, is you don't post pictures, man. You're in here every day listening. You're watching videotapes of Tiger Woods, but you're wondering why the hell you can't shoot 65. So you're not taking advantage of the idea, and you're not hearing, and you're not getting feedback, and we're not talking about early entries. And you and I never have the discussion on why this is a better entry than this, why this is less risk, why this is higher profits. And the other half of that is what I suspect you're not doing, is you're not going back and studying these looks and saying to yourself, holy crap, it tends to pull back to these triggers. It tends to pull back to these areas inside of triggers. And when the rules are met, more often than not, it goes in the direction of that trade. Seeing is believing, but you've got to experience that win to build that confidence. The same way, Spice, you got to get your ass kicked a few times into a termination condition to believe that this isn't your best chance of success. So trust isn't something that happens because I say it. Trust isn't something that happens because I show you pictures. Trust comes from experience. And most people that skip entries don't believe that that's the best entry. They don't believe that it's going to work because they haven't studied it enough. The same reason people are willing to trade in determination conditions. The same reason people go short without momentum. And there's ways to do it, but in the beginning, you're learning to find one trade that wins more than it loses. And Spice, did you hear the little lesson on which side of the small triggers you're on? I'm just going to use this lesson real quick. So everything is going down, right? And then we get to the wrong side of the triggers. Is this market going to go down from the left side of those triggers, or is it more likely to go down from the left side of the triggers? It's not, right? So there's a little bit of patience for you. Hey, you know what? It's probably going to push up there, and that's going to help keep you in because you're going to think about that. Man, those small triggers are up and strong. I'm on the left side. It's got a good shot of hitting that area. And there comes a little bit of patience, right? Because this one little pattern. Kind of cool. I don't want to get in on the wrong side of these triggers unless I've got a clear path momentum and a stack of areas inside of triggers that say that the four things for the trade are more likely to make it go down than the one thing against it. It's all advantages. So what you need to practice, Spice, is going back and seeing these tails, right? And recognizing these tails and circling them, even if it's into a termination condition. And look what the market does so many times. Yeah, market replay. It's just repetition. That's the only thing that I can't give you guys is experience. Market replay is a great way to get experience, but if jumping in is your thing, understanding that being on the wrong side of these triggers in the middle of nowhere rarely works. And we'll just see how long this goes up. What do you say? We'll see when it starts to go back down. You're welcome, Spice. But this goes back to the whole thing. I can't help you guys if I don't know what you need help with. And then Jerry, yours jumping in because you're missing the trade. It's the exact same thing, Jerry. You're an amazing trader. You will find the next trade. And that's the part that you don't believe yet. Most people that chase trades, that jump in 4 points from the entry without room to make money, they believe that that's the last trade of the day. They believe that there isn't going to be another trade. Watch this, just for grins. Let's see if it closes below the small triggers. I know because I've been there, Jerry. Monday morning, 7 o'clock, you're 20 trades deep because you feel like you have to make it all by 8 a.m. You forget that there's still 8 hours of trading. We all do it. I don't care who you are. We all do it. So if I were going to take a shot into a termination, shouldn't I at least let it close below, get the whole bar below the triggers? Because I know that as long as it doesn't, it may not go down. Do you see it, Spice? And I'll be damned. It's kind of cool. Terminations for the win. So what if we take that same reasoning and we say, I'm going to jump in arbitrarily, just for grins, guys. I'm not saying this is a trade. It really isn't. And I put a stop on the reversal bar marker because it's probably going to go up until I get a close below. And of course, this will be the one because I don't have a clear path or momentum. And look, it was the close below that started going down. Kind of cool, right? Relationship to the small triggers. It's a great lesson. Had an order here. You moved it to here due to distance from the small triggers. I don't know what that means. Oh, okay. You didn't get in because you were so far over on the small triggers. Right, Ed? You've got a 50-50 with divergence, and you're like, dude, let it get to the right side. And that's the S&P. And there's your first potential close. You still haven't closed on the other side. Are your large chart rules met? There you go. So now Ed's long because he got to the right side of the triggers. But you're still fighting a 50-50, right? You're still fighting divergences. You're still... Being on the right side doesn't guarantee a win. But it might develop a little bit of patience for you. But Ed, you have to ask yourself, is your trade two divergences from a fib on a 50-50 with the large triggers down and the synthetics flat? And it might be. That might be your trade. Because, right? Why? How about just, I don't have rules. I see up. I see a termination. I see large triggers up. I see small all the way up here. But I don't see up yet. I don't see rules met for a long yet. Because divergence on a 50-50 is a killer. Why not let it get to the other side of trouble? Little room for the short. And then Ollie, we just have different fibs. That's crude oil. For you, that's odds favorable, clear path, perfect entry, intelligent stop. Ollie, I can't find a thing wrong with that trade. And divergence wasn't printing. You only had the potential for divergence, Ollie. That's what that negative number means. It's just potential. When was the last time you cleaned out? When was the last time that you rebooted data or fixed, went through your workspaces, reset, repaired, cleaned out, cache and tick? Do you do that every morning? So one of the things, Ollie, is the longer you take in between those, data gets corrupted all the time. It really does. My morning routine, just to share it with you, you don't have to do it. Some people think it's just too much busy work. Every morning I go to NinjaTrader 8 and I go to database, DB. And every morning I get rid of this one and this one. I just delete it. I start fresh every morning. And then after I do that, I go to my workspaces and I get rid of my recovery folder. To make sure that there's no corrupt stuff hanging in there. And I go to my temporary folder and I delete everything inside of here. This is every morning for me, Ollie. And what it does is I start with fresh data and I'm more likely to have a consistency in my fibs. So yeah, that was just, and that's turned into, I literally do that while I take my first sips of coffee. Because we're in the same time zone here, but I've got a very different look than you do. And a lot of times that's kind of what that does. And my brother and I compare every morning, and sometimes it's one tick of data, one little corrupt piece makes a little change. So that's a pretty good habit to get into. Cool. You're welcome. I mean, always trade your charts. And Ollie, let me say it again. Your trade was beautiful for your chart. I would have lost that one with you. Wayne, mine's on Eastern. I line up with midnight with the Nexgen servers because I want to be consistent with my brother. Joe, I did it 4 times last week. Anytime I have a problem, I just delete everything and start fresh. If I crash more than twice in a day, I delete everything and start fresh. It takes 10 minutes. And then, Gary, you're good for about 90 minutes after the market open, then you have to take a break. Yeah. Most people don't realize that. Most people don't realize that when you sit in a chair for 3 hours, especially if your rules aren't met, you're more likely to fabricate a rule. You're more likely to break a rule. You're more likely to make a mental mistake. So that's why I leave you guys once an hour and go stand up and walk away. It's just a little mental reset. Go get some fresh air. Go get some fresh air. It is. And you're going short, triggers up, triggers up, triggers up. Off an HVA, triggers up. All right. If the rules say you can't go long, 1, 2, 3 divergences in the same price range, I don't hate it, Ed. Yeah, Alejandro, the brain needs to get a break always. Back when I was managing restaurants, there were managers that would try to work 13, 14 hours, and I would just kick them out of the building. I was like, nobody's good after 10 hours. Nobody's good after 10 hours. And this is much more stressful than restaurants if you don't know your rules. So, guys, let's look at what Ed did. Ed said that area only has the potential to break. Divergences tell me it's less likely to break. 3 divergences are a solid termination condition. You're in the restaurant business? It can be, Alejandro. I spent 30 years in the service industry. I definitely prefer this. Golf cart away. The rain quit. Go live life. I love it. I'll see you, Ron. Enjoy your afternoon. Nexgen Jen says, thank you for that trade. You endurance race cars, 2 hours? Yeah. And then Wayne, when I was endurance racing motorcycles, it was the same thing. A 2-hour stint was the longest stint. And we had to come in for safety. So Ed, you're left of the small triggers, right? It's okay. That's 6.5 then. So let's see how long they stay left of the small triggers. Let's see how far it goes, just for grins. Gary, that's awesome. In the Navy, you only work half days. That's funny. Jonathan, everything says up. You're left of the triggers. And when you get right of the triggers, you don't believe it. Because you have a mid-band inside of favorable large triggers. And then 2 divergences, you're willing to exit. Nicely done, man. Nicely done, Jonathan. You've really come into your own. How do you like the new setup? You like it? And then Ed, nothing wrong with getting paid at divergence, HVA, fib. Good job. Nicely done, Ed. Get paid, right? You guys, this is what happens when you start to trust the idea that a momentum trade typically turns into a trend trade when it looks like this. And then Jonathan and Wayne, if you're looking, so this says clear path, strong trending market. You know that your entry may be somewhere right here. There's a little confirmation. There's that arrow. Market flow signal if you're going to take that long. And then 2 divergences, pushes it down. Everything rolls, and it heads back up again. Kind of cool. Nicely done, Jonathan. I wasn't there. So Jason got you going, though? Jason's amazing, isn't he? So, guys, post a question if you have one, but we're going to see how long it goes down from the left side of these triggers. Just for grins. You were cussing you out for not getting out earlier? I'm a fan of getting paid. I can't tell you guys how to trade. That's not my job. But I firmly believe that if you can make $100 a trade effortlessly on 2 contracts, so $200 a trade, and you do that, 3 times a day, guys, you're well into 6 figures. Well into 6 figures. Most people don't practice getting paid. Most people don't practice embracing advantages. They hope that things run forever. Guys, what do we see here? Resistance, almost support, resistance doesn't break. When I start picking areas that I'm not willing to trade into, it's in a range-bound market. I say to myself, hell, this thing's been bouncing off of fibs from both sides. And if you take these trades, guys, trading into areas rarely works. 50-50s don't work out as well. All right, so I'm going to pretend I'm Ed and I'm in the short and I'm just going to put a stop on the reversal bar marker. And guys, this isn't a trade. We're just going to see, as long as it doesn't close on the other side of the triggers, how far does it go? This isn't a rules-based trade. It's not one of those chili dog trades. It doesn't fit Nexgen's momentum trades. This is just us looking to see if it continues down as long as it doesn't close on the wrong side of the triggers. Does everybody understand that this isn't a trade, that this is just wanting to see if left of the small triggers keeps it moving down? Okay. I don't have any rules for this trade, guys. I just jumped in. That's it. That's all. I didn't clear my trouble. I don't have odds favorable momentum. The only thing I have working for me is a termination condition and every indicator aiming down. Small triggers on the 5-1 chart, Spice. This is not a trade, Spice. I don't have momentum. I don't have a clear path. I just want to see if it stays left of the triggers. And if it does, will it continue going down? That's all we're doing. This is us not taking a trade, but rather testing a pattern in simulator to see if there's any validity to it. Does that make sense, everybody? Because someone's going to say, I saw Mark do it, so I'm just going to do it. Oh, look, my reversal bar moved down a tick. I'm going to move down a tick. I'm just going to chase the reversal bar marker. So far, that pattern seems to be holding true. And guys, if you have a chart or a question, feel free to post it. This is me killing time. But all we're doing is testing. Will it continue down if it stays left of the small triggers? And as the reversal bar marker moves down, if it moves down, so will my stop. Did I, Pete? Jump in, jump out. Price clears. Absolutely perfect chili dog. Price clears, jump in, jump out. 2 perfect chili dogs. Oh, look at this, guys. We're still on the left side of the triggers. Sorry about that, Pete. They're perfect trades. I don't think either of you needed feedback on them. But I did ask, did anybody catch it? And you guys did. What do you think? Does it make sense so far? Could you create a management plan on a runner that says, as long as I'm left of those triggers, I'll hold the trade? As long as I'm left of those triggers, I won't get out. Unless maybe I hit a line. But that's $200 right there. Couldn't you just close out at 200 and wait for the next trade? But we're not going to. We're going to see how long this thing goes. Left of the trigger. We're just going to chase it. It's not a trade, Gil. It's not a trade. I said it 50 times when I got in. All we're doing is we're studying that idea that if it doesn't close on the wrong side of the triggers, it continues down. This is not a trade, ladies and gentlemen. I don't have any rules for this trade. That's okay. So what we're doing, Gil, is we're testing that idea of left of the triggers. We're just doing it as a class on simulator because simulator is where you got to learn lessons. If you try to learn lessons in a live market, you're anxiety. And Ed, correct management on your trade? Your exit was correct management? You're welcome, Gil. Sorry. That's why I say it so much, because somebody always comes in and says, well, what was the trade? There wasn't. There was no trade at all, guys. I just jumped in the market arbitrarily because price was left of the triggers. That's it. And now we are collectively seeing how far it goes, as long as it stays left of the triggers. Man, Sam, I'm not even testing a trade, right? All I'm testing is if it will continue down. Because I might use this later to hold this trade longer, right? And I might use it later to know to get out of the trade when I start getting to areas, or to say, oh no, it's too soon. I'm on the wrong side. Let me be patient. Let me get it on the right side. So all we're doing is, it's kind of cool. I don't care if I lose. Look at that. I got to close on the wrong side of the triggers. And we got 3 bars in a row almost instantly. So there might be something to this. Everything's patterns, ladies and gentlemen. Everything is patterns. Pretty cool, right? You guys see me in class, right? You guys see me in class looking at your pictures. You guys don't see the 14,000 pictures that I've taken to be able to do what I do. Ed, this is what's killing you? So, why don't you ever talk to me about stops? Why don't you ever post your entry with your stop in place and say, hey, Mark. But Ed, I can tell you one thing, is that great entries create manageable trades. That taking the right trade makes stop placement easier. Fighting everything, where the hell are you going to put it? But guys, look at that. Isn't that awesome? So if you are in a momentum style trade, guys, doesn't a close on the wrong side of the triggers justify it an exit? Because you just don't know how far it's going to go. How much are you willing to get back? So this is a little management thing. So Ed, this trade, where the hell would you manage it? I don't know. There's nothing to... Hope creates large trades. Hope creates big risk. All right. But does 3 points make sense? Is it where the market shouldn't go? So that's your thing, Ed. When we talked earlier about what's my thing. Hold on. What's your thing? Stop placement that is emotion based, not pragmatic. So how do you fix it, Ed? Great entries fix it, right? Favorable trigger lines. From areas fixes it. Using reversal bars for stop placement. That helps. So there's a lot of ways to fix it. So now we go back, Ed, and you show me 10 pictures, right? You show me 10 pictures where you get stopped out. If you guys went short with the reversal bar, you know your stop goes above it. That's one of the ways you can use it. Mark, you have no idea what's going on. That's okay. So what we're doing right now is, and welcome to the room if you're brand new. So the first hour every hour, Mark. The first hour every hour. What a great way to do this stuff. Thank you for saying that. Thank you so much for saying that. I'm going to pull this up. So one of the things that we do, and the way class is designed, and it's awesome to have you, and not knowing what's going on is a very real thing in the first couple days. Were you here in the first hour? Sometimes I miss names. And it's okay if you weren't. But the basis of this class, okay, cool. Well, welcome. Jumping in at the tail end is hard to do. So what you can expect tomorrow at 9 a.m. Is I teach what's called a high probability trend trade. That's my focus for the entire first hour. Ed, for the whole first hour, every day, is dedicated to what we call a high probability trend trade. And this is a trade that typically wins 70 to 80% of the time. And this is a trade that creates a lot of confidence. But most importantly, Mark, it's a trade. And what it does is it teaches you to read your indicators. Because what you're going to find is that about 90% of your day is literally just reading indicators and waiting for these advantages that we talk about. So we focus heavily on chart reads initially, and I take these 3 rules, and they're very basic rules, and each rule provides an advantage. The first 2 advantages that we study, is we talk about momentum and what it looks like when the market is likely to continue in the direction. And I break it down and we look at it and we circle it and we talk about how to study it in the first hour. And then we learn to recognize these areas on a large chart that, awesome, hope to see you, Ed, that may stop the market. So what we do is I spend an entire hour helping you understand how to recognize momentum on a chart and a clear path. And they're very simple rules and they're broken down individually. And then we talk about your first entry. And it's an entire hour dedicated to these 3 concepts, breaking them down. I teach you how to study them. I give you this spreadsheet that breaks the individual rules down. And honest to goodness, man, everything that you need to be successful with the software, I give you in the first hour. And those first 2 rules are enough to have a trading plan that can be consistent, that can be confident. So what I do is I take the most remedial approach, and we just try to create a little bit of awareness. And then I give you a plan to take this first trade. And once this plan, this very simple trade, once you start to recognize it, to understand it, that's when you start to find more and more opportunities in the market. But I encourage you guys to give me about 20 days of just study. And then the second 2 hours, and that's why we're kind of all over the place, the second 2 hours of class are dedicated to giving you feedback on anything that you post, whether it's a high probability, whether it's a question about momentum, whether it's a management question. The class becomes a discussion, and the discussion, the catalyst for discussion, are your pictures in the room. So Jonathan just posted this in the room. And he said he's testing the left side of the triggers. And Jonathan, you went short on the wrong side of the triggers. So left side of the triggers, it continues down, right? Right side of the triggers, it goes up. Left side of the triggers, it goes down. Jonathan, you're in again on the wrong side of the triggers. But once you get left of the triggers, brother, it just continues up. Does that make sense? So I'm not sure where you're testing it. Right here you're testing it as it continues down. But so yeah, it's a cool concept. And then, so Mark, he's asking, how come I can't see my numbers here? So even if it's not a trade, I'll tell Jonathan, you just built a brand new workspace. What you're going to need to do, my goodness, I've got a lot of stuff open. One of the things you'll need to do is right click and go to properties and write, where's it at? Show realized P&L when flat. So if you check this one, Jonathan, you'll see where you're at. So Mark, that's kind of the same thing every day, is 3 rules on only 2 charts and how to catch that best of the best. And then from there, it's open season on answering every question that you have, making sure that you're comfortable. But one of the things on demo, and I can't stress this enough, demo probably isn't going to make you a world-class trader. It's not realistic to believe that's going to happen in 7 days. But by the 2nd or 3rd day of your demo, Mark, you're going to know without question that what I teach works. You're going to know without question that these fibs are absolute gold. You're going to know without question that momentum tends to push a market. And you're going to have everything that you need to find the success that you're looking for. And we're going to do it very conservatively at first, and then your plan will grow as you learn to read your indicators. So your first couple days, I think it's fair to say, and all I have to do is type in drink and the picture comes up because I've shared this a million times. Your first couple days feels like this. There's a lot of information coming at you. But if you keep it really simple and focused on these very basic concepts, there's no doubt in my mind you'll get exactly where you need to be. And if you promise to post questions in this room, if you promise to post pictures in this room and tell me what you see, my promise to you is that we'll work together through every picture to get you exactly where it is that you want to be. We'll correct any challenges that you're having. That's a word. I just made that up. And more importantly, we'll celebrate the victories that you're having so that you can continue to focus on what's bringing you those victories. So welcome to Nexgen. I want you to do everything in your power to prove that I am full of crap because you'll be with me forever. We'll be talking about our kids to each other. Like fixin' to, that's very Texas, right? Right into the termination, guys. They're fighting in between these fibs. Fixin' to. When I lived in Colorado, I had a manager that made fun of my saying fixin' to. When I was in Oregon, I told the guy that I worked with, yeah, so Jonathan, right click over here in the gray section and go down to properties. And that's where you're going to get, here, let me just take the picture for you. I think pictures are great. So you right click in here and go to properties, and then it's going to be show realized P&L when flat. And if you can't see it when you're in a trade, you have to make sure that you have something picked on P&L display unit. And that should get you taken care of. Let's look at a different market. There's one of those potentials to breaks, and there's divergence. Man, but it is coming from a strong bottom. So for you guys using my brother's new template, what if we get a market flow signal from this area on the potential to break? Don't click on the chart, Jonathan. Don't click on the chart. Click over here in the gray area. Right click. Not on the chart. If you right click on the chart, it looks like that. Oh, you got it. Okay, cool. Got it. Sorry. So guys, potential to break, lot of momentum coming from a termination condition. This is where some of you may want to use John Novak's new platform here. If you get this green arrow, maybe you take a shot at the trade. If you don't get this green arrow, you sit on your hands and wait. Does that make sense? Termination, odds favorable. There's the arrow. My risk is established. Because it's only 50-50, maybe I take a shot here. It begins with momentum, termination condition, area inside of favorable large triggers, but because it's not perfect with divergence, waiting for a market flow signal gives you the ability to at least say, my risk is established, I have a fighting chance, but it doesn't guarantee a winner. Take care, Wayne. Samuel, they are all in the resources page, but I built, hold on one second, let me find it. I'm hoping this one loses, to be honest with you. Hoping this one loses. There's all of the workspaces, NASDAQ, crude oil, and S&P. You just have to put it in your workspace. Guys, it's a 50-50 with divergence. My rules aren't met. I'm hoping this loses. Maybe to paint a picture about the idea that following rules is important, that having rules is important. Jen, price didn't reach the trouble area. Price breaks the triggers. Huge gap in between the triggers. Divergence on a 50-50. It might win, but my rules aren't met. And this is what that new one's going to do for you guys. This new one's going to get you into trades where your rules aren't met. If you believe that market flow is magic. But Gil, what do you think? What if you got to the other side of the triggers with this look? Maybe you've got more of a fighting chance, right? Pretty cool. Now we take a lesson from earlier and we kind of compound on it. All right, you tell the dogs I said hello. So everything starts from a foundation is what I really wanted to say there. Everything begins with a foundation, guys. And you're going to find a million reasons to talk yourself into trades. But if the rules aren't met... No worries, Gil. I got you, man. So start getting in the habit of posting what you see. Start getting a habit of taking advantage of the fact that there is feedback in this classroom. Live, 15 hours every week. There's nothing worse than sitting on the sidelines, right? Holding up the wall, wishing someone would ask you to dance when all you had to do was go ask her to dance. Don't be afraid to participate, guys. I am the warm, fuzzy Novak. And I think that's it. It's noon. Holy smokes.